evens are trading here now, guys. 82 evens are trading. Paper comes in a big seller. 81 evens are trading here now, guys. 79s are trading.
Testing 1 2. Hopefully folks can hear me if you've joined me on a weekend here for some live futures charting and essentially an AMA. Ask me anything. No guarantees you'll get a response to everything, but feel free to ask away. So first off, I am going to just start charting the E-mini futures and kind of go through some of my process here. What's up, young cryptic? If you guys have questions, I will answer. I'll just break away from charting and answer those questions as they come up. So let me see here. I need to adjust my my screen over here. Trying to monitor who is on and all of that. Let's see. All right. Taking a quick gander. All right. Well, that'll be enough. Okay, cool. So what I typically do is I start from a higher time frame on the E-mini. I've got commitments of trader weekly, daily, commitments of traders weekly. I have daily charts, hourly charts, and 5-minute charts. And so here's what I'll do is typically my charts are sort of sectioned off like this into quarters or fourths. And so what I'll do is I will maximize this chart up here. There we go. You know what? Let me turn on something for the mouse. Let's see. Epic pen. What is it? Pointer focus. There you go. Now you guys can see this a little bit. Okay, cool. This will work here. All right. So here we have the commitments of traders weekly for the E-mini, and what I like to look at is I like to see so this is the COT for the S&P E-mini future contract, and that just stands for commitments of traders. And essentially what I like to look at is what the asset managers are doing relative to what they've done in the trend, and then look at what price is doing relative to that. So keep in mind this is a 3-day look back. In other words, that's live. That's data that's being reported as of Tuesday in the week, right? So there's a little bit of a delay, right? So asset managers have been chasing this market a little bit, despite selling off here. So it's been interesting. A little bit of volume the last few days. Asset managers are starting to get a little bit long. Leveraged funds are coming off. Other reportable, smaller traders, about where they normally are. Off of this area, dealers have been getting a little bit longer. You could actually look at this as kind of a bit of a trend line here, like so, right? For a while, we were kind of in this trend here. Oops. But anyway, still in the channel, right? We tried to break out of balance. We now have come back in. You could, on the weekly, you would say that this is definitely a false breakout kind of look. But again, we're still in this channel. On the weekly, still above all the major moving averages. So still in an uptrend. On the daily, let's make sure we're on the E-mini here. All right, we essentially see the same thing. The 50 DMA, or 50 period daily moving average, you could also call it the 50 SMA, but when you're using a daily chart, you call it the 50 DMA. daily moving average. So holding that for now, but we've definitely come back through what I thought would be a bounce area, which is about here, right? So we've come into that and broken a little bit lower, and we've done it again. Oh, I hope this tool works right now. It'll make me so happy. Epic pen. Come on. All right, there you are over there. And there we go. Let's see if it works. Nope, it doesn't work up here. Man, that sucks. It's working on this, well, a little bit here. Let's see. Let's see if I move this up here if it'll work. Nope. Turn it off, turn it back on. Nope. Son of a gun. There, let's minimize this. Let's see what we can do here. Close it. Start it back up again. It's a lot more helpful when this thing works. Oh, it's right back in that mode. And it's not working. Bummer. I wonder if I turn off Epic Pen, or what's the other one? Pointer focus. Let's see. We will exit that. What is going on, Adrian? Let's see here. Turn this bad boy back on. Still nothing. Oh, that's the worst. All right. Well, let's close it. Try it again. Let's try this again one more time. Nope. Bummer. All right, I'll just keep the pointer focus on then. That stinks. Probably would have to restart my computer to get this to work. Anyway, so we came back into this area after this humongous breakout, and if we actually look at the retracement of this move right here, right from about 45.2250 all the way up to, I don't know, let's go to the top, 48.09, and we put a little fib tool on this thing. There you go. So we're at about the 50% retracement, right? Which is the 50 DMA, right? And then sort of the breakout of this move is right down here or so, right? Because you can think of this as like a, well, let's just do it. Right, a short, boy, that's ugly. A short-term channel, and then we sort of broke out right here. Okay, just out of this trend, right? So this engulfed, and then we just kept going. So this is where a lot of traders are going to be trapped right down here in this area, which is about the 618, or a little below that. And I like to see a move below the 618 to get all the fib traders trapped, to get all the fib traders stopped out, right? There's a lot of people who like to buy precisely on 50 and 618, and then they have their stops a little bit below. So when we move below that and we come into this area, if we get a really strong bounce after seeing sort of stops or high volume printing intraday down here, then I would look to be a buyer. If it right comes down here and then springs up, I'd be looking to be a buyer here. Right, and then that would be, sort of bouncing above the trend line, quite bullish. Another scenario is coming all the way through the trend line, right, and not quite taking out this low, then bouncing back in, and that would be a false breakout of sorts on this trend line, right? Sort of like what we just did here on the breakout from this balance area. We came out and we couldn't continue up. The market just sold off, right? All the Fed stuff. So those are some of my thoughts there, like potential scenarios, right? And so those are things I'll be kind of um, thinking about moving forward. Um, and let's take a look here. Let's get rid of some of these drawings. Let's just use the undo tool here. And what I will do is, since this daily chart overlays onto my lower time frame charts, I'll leave the fibs up there, right? Because I want to remember intraday when we're coming up to, say, the 618 and below it, right? And so we'll call this area here, this green shaded area that I've just made, we'll call this the 618 stop run buy zone, okay? We'll call that, and then that'll show up, say, on an intraday chart. So anyway, here's the daily chart, right? We now have had 3 days down in a row. You know, Marty Schwartz says about 3 consecutive down days. Don't short it. Maybe look for a buy. So here's an example of the 3 down days right here. 1, 2, 3, 3 big red days in a row. This is a little different, right? It's one humongous sell day after Fed, and then a little consolidation, and then now breaking down. So this 3 down day move is not as good of a setup as this, right? This day I actually, on this setup I actually bought, and so it was a much better move. But this is not as good. So just keep that in mind. You're like, well, there's no clear signal. Yeah, that's right. And so that's how trading is sometimes. You don't get a really stupidly clear signal all the time like you do here, right? 3 big red days in a row, buy. Or consider buying, you know, based on bigger context things, right? Here you had support, and so, you know, we pushed up, made a higher low. And so, you know, that first green day, you could already, shorts are in trouble, right? We sold off on big volume. This volume here right now is a little bit lower. Hey Dirk, I am happy to see you. I've been missing you, buddy. Your awesome charts in our Discord group. Dirk is part of the inner group on Discord. So anyway, we've made, let's see, we're making higher lows right now, and on a little bit lower volume here than was here. So this is still, in my opinion, this is still not bearish yet. I know everybody's calling for the end of the world already, but we are in a solid uptrend, folks. So pullbacks are healthy. When you get pullbacks in a bull market, you should buy them until they fail. And so maybe a failure point might be down here at 4,500, right? Then we start making lower lows. We'll still probably bounce again. But that's when you should start getting concerned. Break of the trend line, hold of the trend line, retesting back up towards the trend line, going through a little bit, finding stops, then coming back down. That's when you should start getting worried. Break of the 200 SMA, right? 200-day moving average, right? But you want to look at structure, right? Lower lows instead of higher lows like we have here, right? So, you know, and this would be one big structure. If we break down from that, you know, balance might be somewhere down in here, 42, 4,300, right? And then you're looking at a much different kind of structure, right? You're looking at you're looking at a potential left shoulder, head, then right shoulder type of thing with the measured move down to 35, 3,600, right? So, you know, and we have the potential to do that with let's say the Fed surprises us, tapers like crazy, and raises interest rates. Yeah, that could send the market in some kind of direction like this. So anyway, I'm just pointing out what I'm seeing here on the daily charts. And again, this is an AMA, so feel free to ask about whatever. You know, you want to know about this chart? This chart. You know, all these screens are being brought in from multiple monitors, so I have to remember that this is the bottom right for you guys. It's not for me, right? It's from a totally different direction, so I'll just have to keep that in mind. I've got the preview up, but you know, I'm a dummy sometimes. Anyway, if you guys want to ask me about questions about this chart, how I made it, right? How I've got my DOM set up and why and what all these things are, or buttons or any of that stuff. How I've configured some of these charts. The one chart I will not talk about is this one. I won't go into depth on how this is configured or how it's used or anything like that. And the reason for that is the inspiration for this chart it initially was not from me, and I've agreed not to discuss it with everybody else. So that is why I say that. So anyway, I'll eventually get to these charts, but for now we'll just keep this we'll keep this like this. This is a weekly TPO. So anyway, back to these candlestick charts over here. So we've gone through the COT weekly, right? We've gone through the daily, shared some thoughts. So you kind of know what I think so far on here. Now let's go to the hourly, all right? So this is how I normally keep my hourlies in sort of this grid. Look here. Oh, look. Is Sierra chart not expanding it fully? No, they're not. Okay. So let's see. Tile this grid horizontally. Okay, there it goes. It fit. I probably at some point I resized the window and never adjusted it again. So anyway, back to the hourly. So let's go maximize this E-mini chart here. Let's see how many people are on here. Okay, we've got 4 people. Yeah, it gets more interesting the more you guys ask me questions and stuff, because sometimes I run out of things to talk about, and just a little bit of interaction helps me quite a bit. So yeah, feel free to ask away. There's no dumb question. If you guys have been in Discord when I live stream, you know that I kind of thrive off the interaction more than I do just giving a presentation about what I'm doing. So okay, so here on the 60-minute, what I like to do with the 60-minute is, you see these yellow lines? These are essentially using the study extend closes until future intersections, right? And essentially that's what this yellow line is, right? Is that when we've had some sort of gap, right? It'll extend, so here, gap from here to here, gap from here to here, or whatever. Again, this is an hourly chart with a weekly volume profile, right? That just has value area low, which is the pink, value area high, which is the blue, and then the thick white line is the weekly volume point of control. So you can see the abbreviations up here, right? W VPOC, weekly volume point of control, W value area high, W value area low, and it's, it just looks at the whole weekly sort of volume profile. But these lines essentially just alert me that there's gaps in the market, and they'll extend until they're intersected in the future. And so, on the way up here, right, you can see that there's a gap down here even, right? There was this gap filled early on, but, some really aggressive buying here with very low volume, right? And we've sort of touched into this area. You see that 46, 53 or whatever in the RTH, right? And so we've retraced some of these areas that had really aggressive buying with likely, FOMO type buyers, and so we're now washing out a lot of those weak hands. So this is actually a very healthy thing that we're doing short term in the market, right? Another pure gold video, says Pierre Clos. Thank you, buddy. I appreciate that. I need all the encouragement I can get most of the time. There are some. Are you cooking pike, man? You must be talking to someone else. I don't know. Oh, I didn't even notice. Are you using constant volume candles instead of time-based? Pikeman? I think you're referring to this chart here. Yes, these are 1000 volume candles. That's what that is on this chart. So there's some kind of delay on this video, guys, so just keep that in mind. So the more clear you can be on some of this, it helps me to know what you're actually asking about, because there's going to be some delay. I put it to as little delay as possible, but I think it always ends up running around anywhere from like 10 to 30 seconds delay, and 30 seconds is more likely. So yeah, Lozim Haziri, This is Sierra chart. Although I am demoing or attempting to demo the Edge Pro X from EdgeClear. I think that's a pretty cool looking platform, so I'll give it a shot and take a look at it. I haven't actually quite set it up yet, but I think I did not follow the directions, so I may have to email them. I do, Dan, gentlemen. I have so the way that my brackets work is you see these buttons. This means 3-point take profit, 2-point stop loss. So if I click this, it'll automatically set that up. Now I wish Sierra chart highlighted the save trade window configuration. It does not. It will do it for the volume, which is I think appropriate, right? Brackets on or off will highlight if selected. But I think that Sierra chart messed up here in that the trade window that's actually selected does not stay highlighted. If you see, if I long click on it and I'm holding down my left click button, it stays highlighted, or it stays highlighted as long as I'm pressing the button down. But as soon as I let go, boom, it unhighlights. That's bad, because you then at a glance you don't know which configuration you're on, right? For sure, unless you remember, and that's not good. So anyway, I've got it set up like that. So that's 3-point, right? Here's the cancel all. Here's the 5-point. Bing. This is 4-point stop loss, 8-point take profit. Bing. Right? Here's so this one, when you click it, as soon as you click it, because it's a 2 target type order, it automatically changes it to 2. Why is that? Because you can't split a contract in half. So here you go, right? So you see that? So that's, oh, I hit flatten instead of cancel all. And then the last one I have is this guy, which essentially this is a hard stop here, 3 points below. And then once this goes 5 points into the money, it becomes a 3-point trail stop that trails at 2 points. So, and then, yeah, it just, you know, it's a way to sort of lock in 3 points, right? So lock in the 1-to-1 R's, which would, if it went to 5 points, it would just lock it in up here at 3. And of course, I could manually move this around. But, you know, if I walk away from the computer and I'm like, you know, I think I'm in a trend, once it hits that 5 points and it moves the stop up to 3 points. Yeah, this is exactly, Dan, the type of thing that I cover in my control bar customization videos. So anyway, on this, you know, it would lock in, let's say, at least 3 points of profit. After it gets activated, I could even move it back down somewhere to break even to give it room, right? If I think it's going to be a trend day, and then just do, you know, if the market's 5 points up, this trailing action turns on, and then it stays on. But then whatever distance I adjust it from the market, it will trail the market at that distance. Let's see, the bottom DOM graph, what is the time scale? What do you mean? What is the time scale? Bottom DOM graph, what is the time scale? I'm not sure what you mean, Pierre or Pierrick. I mean, the chart settings are just the, right, for me the RTH open, but I don't see a time scale on the bottom DOM graph. So yeah, I'm not sure about that. So you can see this one. Well, maybe you probably can't see it. This is the E-mini here. This is NQ, this is CL, and this is GC. So these are just static. These are what I really focus on during the week. Oh no, yeah, it's so this is one instrument, this is a second, third, and fourth, and so I'm only trading 4 instruments. Guess who's cooking now? All right. Cook it up, Pike. So anyway, I guess, let's see. Did I miss any questions? Okay, yeah, we're good. So back to this hourly chart here. So what I like to do is look at the sort of the gaps. I like looking at the last week's volume profile and just kind of seeing what, didn't trade much volume and how did price react essentially around some of these areas, right? Little volume area here. So you can imagine, right? Oh God, I wish I had something. Let's see, pen. Let's see if this pen works. So you can, oh, it doesn't. See, man, it's the worst. It's just the worst. So you can imagine up here on the left, right? If you drew kind of like a little half circle around here, this is a whole sort of consolidative zone in the RTH, and then we spring up and we break from it, and then we have this maybe a double or triple distribution on the day. And so this area where we break out from becomes resistance. But if you think about it in terms of, this is one big area, right, where traders are out of position, and then we don't get far and we get another distribution, but then the market rallies hard off of this little area here. On this, again, this is this week, last week, 3 weeks ago, and then we get a breakout from that area, and then we get another distribution. So what? And then here it's really thin on the volume profile. You see, we get a high volume close here, and then we break up from it, right? So you can see this is closing, and we know that we do a lot of volume near the close, so that's why this is super high volume. And then we have a gap, but so as we come into this zone, right, you might expect this to have an intraday bounce, right? And again, this is an hourly chart. Maybe there was some intraday bounce off this zone, or maybe not, right? All the Fed news was maybe very bearish. So I'm reading Philip Lysiak's comments and question. And so he asks, I have a question about your trading plan. How broad is your trading perspective? He says, do you make any assumptions before starting market opens? Example, I'm looking for longs today, or do you trade what you see? And every day is tabula rasa, which I don't totally understand, but I'm sure he means something like, every day is just, you trade it on its own merit. So I have, if you rewind the video, you'll see that I use a weekly, a daily, and now I'm on the hourly chart here. So that kind of addresses how broad is my trading perspective. And that's what I'm kind of sharing right now. So if you rewind back to the beginning of the video, Philip, it'll answer a lot of your questions about how broad is my perspective. And then as I go through this video, I'm going to answer your question about how broad my perspective is, and what are some of the tools that I use to essentially give myself a bias for the upcoming week, right? So even though I give myself a bias, I'm still looking to see, does the market break against my bias? And if so, well, then that gives me information. So for example, if I'm expecting some sort of consolidation and then move up and that doesn't happen, the market sells down. Number one, I know I'm wrong, right? Number one. Number two, I know that, if I had a level based off of what I thought were, say, rotations, right, around breakout points, and that I think now at the first touch of those areas, shorts should be covering and we're not getting bounces, well, then that tells me something about the sellers in the market, right? And so that will change my intraday bias from, hey, this weekend, according to what I interpreted, now the market is weaker than I thought. So I have to reformulate and reinterpret what I think the market, how weak or strong the market is. So having a plan to frame your interpretation on. So having a hypothesis allows you to say, I'm wrong or I'm right about certain things about that plan, and then I can reformulate that. And that framework provides me with a good way to sort of invalidate or reformulate what I think is happening potentially in the market. So bottom left graph, what is it? Bottom left graph. So you're talking about bottom left graph. You're talking about this on the DOM? Is that what you're? Because that would be bottom left for you. So, yeah, I don't know. It's just a DOM. But you'll have to appreciate it, Philip. I'm going to be having, me and my wife are going to be having our second baby here in about a week. And so I'm not going to be around for a while. So just FYI. I will be I will be focusing on the newborn, and just we'll both be doing the whole sleep deprivation thing that usually comes with having another kid. So just I'm going to put it out there on Discord that I'll be sort of not very active, which is part of why I'm doing $1,000 account challenge right now with contributors, because I think a lot of times, let's say if I'm holding the newborn, I'll be trading from my phone or something like that. So I've been setting up my another account using CQG, because they've got a nice mobile app to trade from. It's got a DOM and everything like that. So I'll be only trading with $1,000 because I have tried trading around the time where we've had a child before, and it didn't go well with crying babies and sleep deprivation. So this time I'm being a little smarter about it, only risking 1,000 and competing against a bunch of other contributors. So we'll see how it goes. I might be the $1,000 account biggest loser. Who knows? But anyway, let's see here. So back to this hourly chart. What I was talking about is we had big volume, and then we hesitated here, and then we distributed again. Let's see how many days in a row. Let's see, 1, 2, 3, and so you had a whole bunch of traders positioned, and then you had some distribution, and then you had the shorts lost here out of that short-term breakout distribution, and then we had a big distribution up here, which is when we came into that, the shorts that lost, boom, big bounce. Now the shorts that lost here, so this is showing rotations, boom, big bounce. Fairly good sized bounce. But in the short term, what happened? We had consolidation and then consolidation, and so the market is keying us off to here we have this move, consolidation, bear flag, breakdown. Didn't find any continuation. Break above. Now holding below this area, but still it's not a clean breakdown to this area, And so it's an interesting look in that you have this bear flag followed by this other move, and then another consolidative move here. If we break above 47.10 and hold, so let's say we come back up, and then we hold, we come back down, and then we keep going, I'd look to get long. That would just be me, because that would show that these were strong buyers and that the shorts are likely on the ropes. So just one scenario. It's not wholly predictive, but it's sort of an if-then analysis. Let's see. The volume bar, is that hours? Yeah, Pierrick, I'm not sure what you're referring to. The volume bar, is that hours? I don't know which chart you're referring to. So I'm not going to guess. Lolzim Haziri asks, is Discord a free access, and do you provide trading ideas on Discord? Discord is completely free. And I'm not a trade service per se. Lolzim Haziri, what I would do is, right, you can check my Twitter, you can check my or use my Twitter profile to get a Discord invite. There's a non-expiring Discord invite in my Twitter bio or header, and then there's also one in the YouTube sort of main channel. So if you go to my channel in the top right, there's like Twitter, there's Discord, and then there's my email address. So that Discord is like a Discord invite link, but just go in, read the rules, because that's really important. Otherwise, if you start posting in there not according to the rules, some of the moderators will either delete your posts, or if you're really violating some important rules, they'll ban you. But it's all free, and sure, there's lots of people who provide lots of educational trade ideas, stuff like that. But my goal is not to provide people with signal services in there. I do interact with people, but I interact the most with people who are part of the inner group, which is, it's not paid for. People have gotten access to that because they give uh, a lot in the Discord, and so the whole I guess idea of the Discord is give and take, and so those are people who really understand the idea of sharing their knowledge, and then they get it back from me and other. I guess we call them contributors. So with the idea being that we have like a private area of the Discord server where only contributors, right, get access to that. And so those contributors are people who we've noticed like essentially give to the community consistently, and they have the kind of personality that is pleasurable to trade with. Some people they give, but then they're also jerks about it too, right? They're arrogant, or they don't play well with others, etc. So yeah, that's so we essentially, for someone to get into the private group, a person has to be contributing for weeks or months in the general area of the Discord, and then if we notice, well, we tend to notice everybody who's actually talking. Someone may submit it to the contributors group. Someone may submit that person to the sort of the moderators group for a vote, like, hey, what do you guys think about XYZ becoming a contributor, or being put on probation for contributor status? And then we all vote on it, and you have to have 100% positive votes, because if someone's like, I don't like that person, well, we want to keep the chemistry of the intergroup really positive, right? So it's got to be 100% acceptance. So and that's not hard. If you're a nice person and you're generally respectable towards everybody, then you'll most likely, and you offer good analysis, then you'll likely get in. But that's essentially what it is. We're going to be around for a long time, this trading group, and some of us have been connected for a long time, and we'll continue to just be patient on adding to that group. We're not in a rush. I think we have 12 or 13 people right now in that group. So it's very small, but we've culled that group down from about 50. So it's not like we're all about just having a bunch of people in there that are do nothings. And we do rotate people out of the group that maybe go through different phases of life where they're just not going to be trading a lot anymore, or for whatever reason they're just struggling, or having a difficult time sharing with others, right? Some people get in and they realize, oh my gosh, this is not for me. I don't like the social aspect of it. I'm a lone wolf, and hey, I respect that. I get that. Some people operate better that way, so thank you. Appreciate that, guys, with the baby. Enjoy my night for the next 6 months. I'm gonna, I hope this baby sleeps. That's all I can say. So anyway, let's see. On the hourly, looking at that, get into the Asia. No, I'm not a fan of Globex too much. I don't mind the European session. but I don't like the Asian session too much at all. It's a little too choppy for me. Hello, Khalid. Or Khalid. Is it Khalid Talani? Wait. Taliani. Khalid Taliani. I hope I said that right. Anyway. So those are some of my thoughts on the hourly around this level. Of course, if we break down, then we have this big volume node here and where the market kind of hesitated. And now notice that it's underneath that 618 stop run area, right? So if we push down through that into this zone, if you look back at the beginning of this video, I talked about how I created this 618 area, and I already shared my thoughts on that, right? So now it's running into looking at sort of this microstructure. If we push down below, say 46.23, we're into the 618. So now then this becomes very interesting. And then we've got this gap down here, right? And then remember what I said about the daily, how we've got this is a daily trend line. If we push down into this gap and then maybe even don't quite make a new low, right? We get into this consolidative high volume area, then bounce. This would be a fake breakout on the daily, right? So anyway, there's the hourly, and then I've got my 5-minute charts, which again, these sort of are in quarters like this. And so what I'll do is I'll maximize the screen, and you guys can see, right, all these lines show up on the 5-minute chart, right? And I know what these lines are from based on the line thickness. This one right here is a daily. At the very bottom, this is a weekly because it's thicker. And so that's even why I have my buttons like this. You see this, if I select this button up here on the left, it's probably pretty small for you guys. So it's a trend line button. So TC1, TC2, TC3, and TC4 are very thin. TD, which is tool configuration daily one, is slightly thicker. TW1 is tool configuration for weekly. And what that means is that the lines will be this thick, right? And so then these show up here on this 5-minute chart, right? So I've got everything nice and overlaid from various chart books here. And so anyway, now what I do is I kind of come over here to the 5-minute and I kind of look at, all right, we had the market break down from the whole Fed bearish take, right? And then we left behind some, I think, some singles, some just extreme selling, right? And then now we've kind of gone sideways here, and we can kind of see what's the price action, okay? And I like to do this. I like to follow it step by step, right? Big sell-off, a bounce that doesn't even go to the 50%, right? A bounce, a rollover, overnight. I can see it's overnight here. We roll over, and then we don't really extend off of this. So you could say this is one big bear flag. Let's see. Bing, 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 right? A bear flag. So this is the masked bear flag. It doesn't extend all the way down into this area, right? It tries a move, and then it immediately reverses, right? Bear market. Same thing here. RTH tries to break up. Not having it. Breaks down, takes out the overnight low, comes all the way back up, breaks this. So this is a market that is indecisive, essentially, right? It's a bull market still, but so people are still buying the dip, but then we can't break further up. I see more comments are coming in, and I'll get to it after I get this 5-minute thing here, walk through each step. So it's an indecisive market. We come right back into the body of consolidation, right? There's no clean pullback and then hold and continue up. So we come right back into the body of consolidation, which means this market is likely balanced. Again, try to break out of that consolidative area, fails. Comes deeper, makes a lower high, consolidates more in the overnight. In the overnight, can't even break up at all, breaks down, holds the end of session low in the overnight, meaning shorts are likely still pretty trapped here. So again, it tells you balance market. Longs are also trapped, so we're balancing more and more. But now the market can't even break it, still making lower highs. So we come out, take out this low, and then into the open, we rally a little bit. completely fail, make a lower low, and now we're making lower highs. Okay, so it's interesting. This whole area has basically, and it's occurring on volume, right? And so we know big players like to buy declines on high volume, and they distribute out on highs on lower volume, right? Um, and that's just the way markets work. Markets rise on lower volume, they decline on huge volume, right? Um, and so right now we have this sort of this move here. Let's break it down a little bit. We have this move intraday, and here's what's happening. You see this T+1? That's settlement. That's actual CME ES settlement. And what happened is intraday we came down and we bounced off the prior day's close, right? Which is, you can see where it comes from. Comes from right here. Settlement, right? It's not, I say the close, it actually refers to CME settlement, right? That's VWAP of the last 30 seconds of the regular trading hours cash close. So it's the last 30 seconds the last 30 seconds VWAP determines CME settlement, and then they round it to the nearest tick, right? So I'm able to create that in Sierra chart using VWAP and a source chart with VWAP whose chart session times are only the last 30 seconds of each day, and then use VWAP of that, and then overlay that back over onto the destination chart, which is this 5-minute chart. So I have source charts for 2 days ago, which is T+2, and then also yesterday's close. So T+2 is light pink, right? And so as you can see, as we move past the cash session, it turns light pink because now that's going to be T+2, right? Does that make sense? And then here's the actual VWAP of the last, Fridays, or here's settlement for Friday, right? And that'll just extend out, and then this will extend out pink, and that'll be 2 days ago, or T+2. So anyway, look intraday what happened at the prior day's close. We came up, rejected on the prior day's close, right? We made this sort of bullish pattern here. Again, I'll get to any questions once I'm done with this 5-minute chart. We did this, and we made a complex retracement, right? Which also looks like, we'll make it yellow. This kind of pattern, right? It's a bull flag, right? See that? Ching, ching, ching. And then my target off of this, I called it here, was this. Just yesterday's close. I didn't know if it was going to actually get there. I did go long, and I took off here because I thought it's running out of steam. It might be a failed breakout. Well, it did end up going all the way up to settlement, kissed it, and rejected. And then, of course, traders tried to buy around this trend line. As you could see, bounce, failed, came back up. Right, we had the M period here that took out stops, right, just above that wick. That's what M period is famous for doing that. And then we came back down and just failed, and then closed, somewhere towards the lower part of the session. So, this market has tried to rally and is not really doing so right now. It's had opportunity here with this really nice complex retracement. Couldn't go, which leads me to believe on lower time frames that, and again, anything's possible. We did have a fairly high volume close here, which I do track the volume closes for settlement here. That's EST+1 here on this chart. See, it's on the, let's see, the bottom right screen for you guys. And so SVol refers to settlement volume, or volume transacted at the close in the last 30 seconds, which is what settlement is determined off of. It's determined off the last VWAP of the last 30 seconds. And then you can see I do kind of a relative volume bar based on the historical closes for closing settlement. And it prints, the more it fills in the charcoal gray all the way to the end, the higher it is. So if it's all the way up here, historically, that is a crazy, crazy high volume close. So we were on the upper 60% of settlement closes here. on Friday. So higher-ish volume, and you look at the 5-minute chart, we closed almost 90,000 contracts in the last 5 minutes on quite a bit of movement, right? So there was some expansion to the downside closing out lows, right? And with the last 30 seconds holding quite a bit of volume, right? Relative to looking back at settlements like for the past year, right? Which the CME has used settlement based on 30 seconds, the last 30 seconds of cash hour trade VWAP for since last year in November, right? And so that's the back test is all I have. The back test that I'm using only goes back to then because that's all the data we have. Right? That's when they changed it from the 15 minutes after the cash session settlement. So that's what I'm using. Is I'm looking back at that about a year. So anyway, let me look at questions now. Let's see how far behind I am. Cal, okay, cool. Four charts on top. So early in the live stream, I said I'm not going to answer really too many questions about this top chart because so a lot of this setup was shared with me by somebody who asked that I not share it with the world. So I am not going to be sharing any setups or anything from this chart unless it just involves basic support and resistance and large volume trade indicator, stuff like that, right? So that's all this is. So these are just 1,000 volume chart for the E-mini. For the ES or for the NQ, it's 500. For CL, it's 500, and for GC, it's 500. So that's addressing Chris Gardner. Okay, yeah, so I think I've got all the questions. There any questions? So I'm gonna back up on this. Let's see, clear this all out. So that covers the E-mini on just the candle charts, right? And I do this a lot faster on my own, but you see, it takes a lot of time to go through in some kind of depth on just the candle charts. Okay, so we've covered the E-mini on the weekly, the daily, the hourly, and the 5-minute, and we've overlaid from the weekly all the way through these charts. And so now I have a very good idea about potentially some of the setups that I'll be looking for the upcoming week, right? So again, I'm just sharing my process here. I'm not giving you guys a trade plan for the upcoming week, but I'm sharing my process. And however you convert that to a trade plan for yourself, I think that's the takeaway here is maybe the process. Maybe you have a totally different process. That's fine. So anyway, let's look at the weekly TPO for the E-mini and let's break it down. All right. I realize this is one humongous chart, but that's probably good. Let's see. Indigo Mines, nice to see you, my friend. Yeah, I've been trading well. It's been a good week for me. We'll see how much longer full-time trading even lasts here with the baby on the way in the coming week or so. But I plan to not trade, so I won't be around very much. I hope the rest of my Discord fam holds it down on Discord and, keeps doing good work. So here on the weekly, what I'm going to start looking at is, I want to look a little bit further left. So I'm going to open up chart settings. Instead of doing 120, I'm going to do 180 days. All right. Let's see. Let's just get our optimal view here. There we go. Right there. Okay. So as you can right away see, we have this humongous time and volume gap here, right? So this is, if we start to come back up here, this is likely going to be a little resistive at first, right? Because on the way back up, you're going to get longs who bought, say, right? If we combined a lot of these volume profiles, let's see, merge with prior profile, merge with prior profile, do it again. And you can see where this line came from, right? That's a sort of a high time edge here, right? And then it kind of corresponds with when we broke up here, right? And so this 4709 area was important for that reason for me. I made some nice intraday trades there for 5 or 6 points when it happened, by the way. It was really good. And I had drawn this last week, right? So it's still interesting to me in that if we start moving above it, we'll have this area, which will likely give us some reversal trades. But then once we come back up through, we can probably target the upper end of this area, 4760, right? So that's something to keep in mind. And so would I want this overlaid onto smaller charts? Yes, of course. So just looking at this, spent a little bit of time here, not much here, right? So from here, let's see. We'll go to the price. We'll do this extending rectangle tool. And then we'll select the TW2, which is the purple, meaning when I look at it on a low time frame chart, because this will overlay, I'll know it comes from the weekly TPO. So we'll put it right here, and we'll say about up to here is, we'll modify it, and we'll call it low, let's see, low, I don't even know how to call it, low time and LVN, right? So we'll just do that. And then now when we come into some of our other charts, let's say we're in this chart here, right? And we start looking at this, look, there it is, low time LVN, right? It's right up here. So you see that? I'll know when we're starting to get in here. It'll help me to remember the analysis that I did on this weekly TPO chart, right? And I'm looking at this throughout the week, so I know what's going on. But it'll help me to remember, okay, what are some of the potentials, right? We come back up to it. Trap traders longs go, oh, I bought the bottom of this area and now I want to get out at break even, so maybe we have pullbacks, right? And then if we come back into it, right, let's say we pull back off the lower edge of this zone, then we start heading back into it, maybe take a long targeting the upper end of the zone or the middle of the zone for TP1 and then the upper end. And if you can frame out your risk reward, hey, it's a good trade. But anyway, just sharing how I sort of come up with all of this. Again, remember we were talking about the daily settlement. Look at that. That purple line, that's auto painted in there. Look at that. The biggest moves came off that line for the whole day. Look. Bing, 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 bing. I mean, huge moves. Huge, huge moves. Anyway, again, that's a settlement line, right? I already talked about that earlier in the video. So if you're just joining, you'll have to rewind and watch again because I'm not going to go over it again and again and again. So anyway, back on this weekly TPO. So now let's see. We want to kind of look at some of the areas. So we have a high time, high volume, all the way down to about here, right? Now we've kind of filled this back in, right? We're chopping around where in prior, remember this is all combined, it's all merged. So, you know, we're chopping back into the lower end of this value. So what do we have here in terms of volume profile? We have an LVN all the way down here. Now let's keep in mind, what did we do on the daily chart, right? We have all these zones, and we have all this explanation around the 618. So we keep that in mind when we start looking at this TPO and then looking at the LVN here. What? It's 4620. Ha! So maybe I make reference to the fact that I talked about the 618 and potentially what could happen there. Right? So I go get this ray line, I go to TW2 because again I'm charting off the TW2, and so I go in here and I go, okay, it's low volume, and so then I put it right in here and I just make that a level, right? And it happens to correspond to, so this is multi-week prior, but it happens to correspond to this TPO and high volume node, right? So this HVN for volume. So this right side profile is volume, the left side profile is time. So you see how with this profile, the more volume, the brighter purple, right? So I'm color coding just to allow myself, okay, that's high volume, right? Low volume is going to be really white, etc. Right? Notice how this low volume, boom, it was initially a rejection. Why? Because here, this is an accumulation, this is a distribution. Think about it, right? This move was on this weekly, we came up, we came down, we distributed here, and then the next week we were coming down and then back up. So the rotations are, as we come back through here, we're bouncing off of this area where, you know, there's still essentially even from here trap shorts, right? And we kind of explained that looking at the hourly chart, right? When we looked at multiple distributions, right? And so this is the same chart. I mean, it's the same thing. It's just we're getting a different view of it with the various multiple distributions here. So it's on the first touch, the shorts are like, get me out of here because I've been underwater all up here. And so we get bounces. But if we bounce, roll over, and come through, now it's the longs who suffer that maybe bought here, and then the price comes back down. And then now we have this confluence. So anyway, going back to this thick line, before I forget, I got to make reference as to it's an area of confluence with what? The daily candlestick and weekly. So I want to make reference to that. Correlates with daily 618 candle chart, right? Candles. And then what? When I look at this, because again, this is a weekly TPO, it's going to overlay onto my footprint. Here, let's make this footprint big. So we're only looking at, I have to do a little bit of adjustment, but we'll make it big anyway. All right, so it's up, where is it? There it is. And let's take this thing and shrink it. Oh, range, jeez. There we go. Move, okay. Oh. Move this thing. Now, that's going to overlay onto my footprint chart. Look, see that? Correlated with daily 618 candles, right? And so as I see action coming into this area, if it comes into this area on the footprint, and these are just, these yellow lines are incomplete at auction. I can show you the setting for that. It's completely standard out of box for the number bars study. So that's going to overlay on my footprint. It's also, again, it's going to overlay on my, here, let's maximize this one because that's just what we're focusing is on the E-mini right now. See that? Watch. Boom, there it is. Right? And so even on this chart, as it comes into this level, and this is, again, 1,000 volume bar charts, if all of a sudden you start seeing a whole bunch of 1,000 volume bar charts laying out sideways next to here, what do you think is going to happen? All those players who are buying are going to want what? Compensation. Bing! You're going to get a move. Maybe not yellow, but if you guys know, I use yellow for stops. But so you're going to get what? If we come down in here and you get like 10,000 volume bars in succession, all sideways here, right? You know that's 10,000 contracts. Bing! They're going to want to get compensation. They're going to typically want to buy out of that level, even for a little bit. It may fail. They may run into buyers. Who knows? But typically, if people lay down a bunch of money to buy a level, at least short term, they're going to try to, buy through the book and try to get compensation. So, anyway, all this what I'm kind of pointing out is that it's how I'm coming to my analysis that's important, and then how I'm tying it back into what I've already done analysis-wise to give myself a much more complete, or to attempt to give myself a more complete picture of the market. So I'm not done here, right? I've got this HVE, I've got this low time and LVN area. All right, we've got this zone here. So let's look at some of the other things. The TPO. So this is darn close to the TPO, and VPOC, or volume point of control, and time point of control. Right? You see that they're right on each other. Okay, so this is correlating as an LVN from this prior week, but maybe we want to kind of note this and maybe move the level down just a little bit, because how often does the market kind of come into this, not just an LVN, but a high volume area and then bounce as well? So correlates with daily 618 candle. Oops. Let's select it. I want to move it closer. So it's still part of the LVN, right? It's close enough to me. And I'm going to be able to see this on an intraday chart still. I'll zoom around, but I want to make one line, not two, right? Because I want to keep my levels cleaner. But I want to know what the levels refer to. So correlates with daily 618, but it also correlates with this as an LVN. Prior multiple combined weeks, LVN, and then looking back just 3 weeks, we have it as a TPOC and a VPOC, right? So what's the week that was back 12/12, 2021, or in 2022? So it's the week of 12/12, TPOC and VPOC. So modify the text. Correlates with daily 618. We'll put a little forward slash, then we'll say 12/12/21 VPOC and TPOC, right? And now we know that it's high time, high volume, and it also correlates with what? The 618 on the daily, also correlates with the LVN here, right? You could see that the next week had a high volume node to fill out this. So maybe this LVN is the least important thing, right? Which is why, am I noting it there? No, I'm not. I'm only basically noting the last rotation, or the last major structure here. This was extraordinarily aggressive buying, right? And so we note we had already a little distribution here, and this is an LVN here off this week. So these are the things for me that it correlates with, right? Okay, so I do that. And then we also have this high volume node down here at the bottom at 45.50. And I want to note that because you know what? Sometimes markets, they dump really, really fast through levels. And so I want to go find levels for the upcoming week that help me if we do end up in a market that's in free fall. And so you got to be prepared for that. Just because you don't think that's going to happen doesn't mean that you shouldn't be prepared for it. Okay, so let's say that this is what is it, the week of 12/19? So 12/19 VPOC TPOC, and now that's going to show up on my low time frame chart, right? Some singles here on the weekly. All right, kind of noting those. I think we'll be able to see more of the singles on the daily TPO charts, right? And so anyway, you can look at value here. This is value area low, right, in this area, right? Off of multiple combined weeks. Value area high is here, right? And value area is low. Notice how it lines up here with this area, right? These line up, right? Value area highs are here. We just probe below, right? And now we're back up into the prior 2 weeks value area high level, right? It's also TPOC level, right? Kind of coming back to that zone. So it's interesting that it's gotten sticky above value area high. So we're just noting the different things. Maybe it seems like a lot for some of you new traders, but when you do this week after week after week after week, your brain will start to kind of figure it out a little bit. You know, it's kind of like anything in life, right? When you first start driving a car, all these levers and pedals, and especially if it's a manual, it all seems overwhelming. Like, how can I make this smooth? And but then before you know it, the more you practice all of these things, the more information actually starts to make you feel more comfortable, right? And so that's where I'm at, right? And so that's kind of why I do it like this, because I want to be prepared for multiple scenarios. And it may be a good way to do it for yourself is to write out a trade plan. For me, I keep this in my head, and it's not because I document what's going on the charts. I don't write out a trade plan in the same way that a lot of others do. I every night kind of go through this little process here and look at the charts. And some nights it's really easy because the price hasn't moved around, or maybe it has, right? And so then that just adding to this gives me a lot more preparation for the coming, you know, the next day's trade, right? And so anyway, so just some thoughts there. So let's keep going. Let's look here. We have a little gap on the weekly even, right? And so that's interesting. Maybe those gaps will be addressed on the daily TPO chart. Let's see. Might get some more granularity. Right? We have this big down here at 43.53. We have this big TPOC and volume profile with some thin trading, right? Out of this sort of breakout zone here, right? Thin gaps, thin trading, right? Retest. Thin trade, another gap, right? Kind of came back down, tested. I don't know if this occurred in the overnight or wherever, whatever it was, right? But didn't quite fill. So super bullish market, right? But this is an area of weakness now, right? The area of the breakout. So we're well above it, but it's just these are things that I'm kind of noting here. So let's combine this profile. Let's see what it looks like here. We're going to merge with prior profile. Okay. Does it change our view of anything? All right. See where we're rejecting? Right here. An area of lower volume. So just short term. I'm talking about the bounce from 53 up here to 68, 69. All right. You see that? Little distributive area. So shorts out of this area wanted to try to cover ahead of break even, right? A little poor low, but doesn't matter. It's what we're looking at is the rotations here. I'll get to the comments in a second. I see the screen moving out of the corner of my eye, but I want to make sure if there are any questions that I'm getting to them and then giving them my full focus before moving on from what I'm doing here. So okay, just noting that. I do like looking at this area of aggressive buying on its own and not combining it. And the reason for that, even though there's overlapping value, is that the value is very wide and it shows the aggressive nature of buying for that whole week. I mean, it was crazy. And so I'll move all the way back down into this area. It still would not surprise me. So it's just interesting to note that this was just fast and furious up out of this zone here. So, and then noting that we distributed up here and are now pulling back. So, okay, okay, I'm going to move to the daily TPO now. And then, well, before that, I'm going to look at if there are any questions. Let's see. I don't trade the Dow, Cal. Yeah, Indigo. That's interesting. Could be. We'll see. You may want to rewind back to the beginning of the video where I go over the COT weekly, because I kind of addressed that. So. Yeah, just your feel. I gotcha, man. I gotcha. So let's see. I'm gonna go ahead here and move to the daily TPO, and let's expand this little bad boy. Right, so do you guys find this kind of analysis that I'm sharing to be useful? I guess that's my question. I would guess yes. And this is the type of thing that we're talking about on a regular basis amongst contributors, right? And you know, the only barrier to entry is essentially not being willing to share freely with others consistently. So you actually, to get this kind of analysis with other, so I'm a professional trader, but there are other professional traders who do trading for, you know, their full-time job, and have been doing it a lot longer than I have. And we all share ideas. And so what prevents you guys from interacting with professional traders is your lack of wanting to get involved in community. And you can do that in Discord, right? And if you all consistently do it, anybody who does it with a good attitude and with consistency can be part of a trading group that has traders who actually share edge and discuss things and will help you to learn. And hopefully by asking questions and, you know, using a little bit of creativity yourself, you grow as well, right? And then you realize, holy cow, this is valuable because markets are always changing. And if I want to be doing this for the next decade, it's extraordinarily valuable to continue to stay connected with knowledgeable traders, right? And then now all of a sudden you're part of a community. It doesn't guarantee your success, but it sure is not going to hurt. But I repeat this kind of thing often. It's astounding to me how many people don't want to put work in. They don't want to share and get involved. And I mean, you can ask other contributors if you think I'm gonna sell something or I am selling something. I'm not. And you can ask them if I'm consistent with people in the contributor. You can ask them and just say like, is Mike full of bullshit or what? And maybe they say I'm full of bullshit. Maybe not. I don't know. I'm not paying anybody to say good things or bad things. So or anything. So it's just astounding to me that some of you will never actually step up and try to put yourself out there, right? Maybe you're too ashamed or you're too embarrassed that you don't know anything. While, man, every single week on the Discord, when I do stream with folks and do talk and get in voice channels with everybody, you know, outside of the contributors group, we all say the same thing every single week. There's no dumb question. Just get involved, right? We enjoy trying to answer questions that may be redundant or simple, because you know what? Answering those questions sometimes helps us to look at markets in a different way. And of course, we can't be there all the time. Anybody that has been in the Discord for a while will know that I go 3-4 days without even connecting with everybody in the all. Why? Because I'm busy trading. I'm busy connecting with folks that are already putting lots of time into helping me, and then so I give it back to them, right? And so it's, you know, that type of give and take requires the chain not being broken. And so my focus is those people who actually put in effort, right? But to get there, you got to start putting in effort. But anyway, enough of that. Jeez, it sounds like I'm selling something, but I'm not. Okay, so you could see that on the weekly, all this stuff is overlaid onto my daily TPO chart. And now we get a little bit more of a granular look. Now, I want to make sure that all the... So you could see that I had combined this area to essentially find levels. And as you can see, when it combined, it actually gave some nice setups intraday for levels that could be sold. You can see here, right? We had to hold this area, and look, we came back through it, and whoosh, like a knife, came back in, tested lower, came back to it, sold off. Again, this is all FOMC. Let's see. Anyway, before I keep moving, I see the chat moving, so I'm going to make sure I'm not missing something. Oh yeah, John. This is the top. This is a 49-inch monitor, um, from left to right over here, right? And so it's something like 5,000 by 1,800 or 2,000 resolution. And then this is like this middle area with all the DOMs is a 27-inch curve monitor. And then this area over here is another curve monitor. And I'm actually not including everything to the right of this. And so this is like 3 different monitors essentially. So I understand if you can't see all of the text and everything, but I am gonna try to upload in the highest resolution possible, so you guys should be able to pinch and zoom in on YouTube later when I upload it. So anyway, uh, John Bree, that's right. We have, I don't know, maybe over 1,000 in the Discord, and we used to have about 50 people in the inner group. A lot of them just couldn't play well with others, or some of them just were pretty rude, to be honest. So they were uh, either banned from the Discord or removed from the group, and then they never came back. Right? There were some other professional ex-pit traders that were in there, more knowledgeable than me, potentially better TPO traders than me, I think, at least based on what they said. But they were jerks. They were real jerks. They were always condescending. And it wouldn't matter to me if you were the most famous trader on Twitter. If you were in our group and you started to talk down to everybody, the rules are the same for everybody. See you later. Have no use for you. I don't want to trade with somebody who's a jerk. And when you give people when you have different standards for different individuals, that destroys the whole concept of give and take, right? Because if your contribution means less than somebody else's contribution, or if someone else's contribution means more than yours in terms of effort, um, then of course that's going to cause folks that are believing in sort of pay it forward, I guess, to say, well, this isn't consistent. Why should I put all this effort in when others aren't putting in the same amount of effort? So that's probably the thing that I struggle with the most on a consistent basis, is monitoring everybody in there for consistent contribution. And that doesn't mean everybody has to post the same volume, but people do need to give their best, or give, maybe not their best, but they need to give uh, genuinely to others. And if I see people starting to just kind of skate, I'm paying attention to it, and I may have a talk with them, or I may just notice it for a month or two, and then just one day I'll tell them, hey, I notice you haven't been putting out, and this isn't. I'm not going to babysit you, and so you're dismissed from the group, and that's what it is. And that way we don't keep people in the group that are just not putting out, right? So if people haven't logged in for a while, or they are logging in and they're just not doing anything, they're not encouraging others, they're reading everything but not showing appreciation, etc., those people are not going to be welcome back. And we've had quite a few of those, right? And those kind of people know, right? They know if they're not one person has ever said, oh my gosh, you're treating me unfairly. They know, right? They know that they're not putting out, and so it's there's no favorites played or anything like that. It's just consistency. But the group that we've had now has been together a long time. We all know each other on a first name basis. We all know how we trade. We know that when we connect with these people, we know what their intentions are. We know that they're good people, etc. So yeah, the group just keeps, in my opinion, it keeps improving. Pikeman. I really appreciate that, my friend. I am actually sharing real I think real trading edge and knowledge. So me sharing my process a little bit more today. I don't even know if I'm going to have time to show you all the thinkorswim stuff that I look at too, which is a part of this. That, it also tackles, because I like to trade equities, but it also contributes to my understanding of where the futures might potentially be going. So I'll try to bring up maybe I'll only do the E-mini futures right now, and I'll avoid the NASDAQ, CL, and GC because I just don't have enough time. I want to hang out with my family. It's already 1 o'clock, and I have not had lunch or anything, so I'll probably wrap it up pretty soon. And yeah, they get too long, I'll probably start losing my voice and everything too. But maybe I'll bring up that thinkorswim chart. I may have to blacken the screen for a little bit while I log in and all that. It's good stuff. Make sure count numbers aren't showing, but maybe I'll show you guys that too, and show you how that integrates into my futures trading. Because again, the futures are just trading. They're an index trading off of the constituent stocks, right? And so if you chart a certain number of the S&P 100 and the NASDAQ, you can every week, which I do, you can start to get a really good feel for where the index might be going if you're looking at setups on a lot of the large cap names, or even some of the smaller cap, right? If all of a sudden you notice all the mid caps are pretty bullish, and then the bigger names are like, they're kind of in a bottom of a range, right? And we're in a bull market. Nothing technically has broken down. Maybe I'm allowing myself to just sell the bottom of a range rather than continuation and looking for opportunities or something like that. So anyway, I'll get to it maybe. Make sure I haven't missed any questions. Sorry. Cal, it's not too simple. Just get involved. The more you're involved, even from time to time, the more you'll learn, because likely someone will come along and help you a little bit, right? And so it's like anything in life, right? If you take a cooking class and all you're doing is observing a chef from afar, clapping once in a while, oh, good job, Wolfgang Puck, or whatever, you're not going to learn as much as if you go up there, raise your hand, and say, hey, Chef Puck, or Chef Wolfgang, whatever it is, I'm going to actually contribute to the creation of this pizza, right? You're going to feel the dough. You're going to be sprinkling the cheese on. You're going to be up close and getting nitty gritty in the process. So it's the same thing with trading. The more you get involved, the more you see a better, a deeper perspective, right? The more you're going to understand. So I know a lot of people think that just viewing everybody else is enough. But I'd rather personally be learning at the fastest pace possible, right? And so I would encourage you guys to do that the same. To me, you're going to learn much more quickly if you get involved. So anyway. Anyway, I think I've addressed questions. I'm really surprised nobody's asking me about this down here. Yeah, Cal. It's tough. It is so tough. So we're doing a small account challenge right now. And people get nervous. Why? Because we're all, part of the rules is we're all sharing our entries and our exits, and then our daily growth or loss of the account. Oh man, it hurts the pride. I'll tell you what. It sucks sharing, and it has to be real money, no sim accounts, right? So everyone has to prove that it's not a sim. They can't be involved if it's not real money, right? So they actually have some skin in the game. Maybe it's only $1,000, whatever. But it's tough. People are, I could hear it in their voice that they're a little bit apprehensive to do it. But those who do it, they're going to be susceptible to hearing other people give them constructive feedback. And again, in the inner group, and this is where we're doing it, we've created a whole channel for it. And even within the contributors, only those who are involved get to see the results. And there are some contributors who aren't going to be involved. So they're not going to see the results. They're not going to have shared that potentially humbling process with other like-minded contributors. So there's then a lack of bonding for those who are not involved, right? They're not going to be digging as deep and, actually showing other traders who really understand risk management. Okay, why are you not letting any trades run, right? Why are you taking profit on every single trade that has a little bit of profit, and then you let your full stops run? No matter you're losing on this $1,000 account challenge, because every time you take a stop, it's a full stop, but every single take profit is less than 1R, right? Every single one, and you don't have a very high win rate. So you have to change your habits, and if you don't, it's not going to go well for you, right? But some of these people have been doing it 25 years, and maybe they're really good on the stock side, but they're not so great on the future side. Well, that's humbling. That's difficult. That's challenging, right? But that's also personal growth, right? So it's going to suck if, I'm watching or I'm trading with my little baby girl and I'm sleep deprived and I suck it up. But it is what it is. Look at me already. See, I'm even building in excuses, right? This is what we do because it's uncomfortable for me to show everybody else that I'm not doing so well, whether I have excuses or not, right? Because some people, maybe based on our live trading together, expect more from me, and I know that, right? So those are things that I then have to try and overcome. So, but that's all good stuff to me, right? The things that are worth having in life are usually difficult, right? That's an old quote from, I don't remember who quoted that or who said that a long time ago, but that's a true quote. That's a good quote, right? You want to get strong physically? Well, you got to work, right? You want to run marathons? Well, you got to work. It's uncomfortable, right? Unless you're the Tara Mahumara or whatever Indians in Arizona and it's just in your genes. Anyway, all right, so this daily chart. Yeah, so this is this screen here is it's like market internals. It's the tick NYSE NASDAQ market, or it's the tick for the NYSE NASDAQ and American Exchange market, and it's aggregated from those three. So it's not the NYSE, the New York Stock Exchange tick. It aggregates the NASDAQ and the American Exchange, so it's a more broad tick, right? And so it tends to be where everybody else is using the NYSE. I use this because I find that aggregating more data is actually more useful for the ticks to show extremes. Think about that, right? It's like a big index that looks a little bit more broadly, right? And there's probably reasons to use the NYSE because what? Everybody else uses it, and so it's kind of like a 50% retracement. Everybody sees it. But I like using the things that less people are using. There's quite a bit of edge in that. So that's what this area is. And then below it, you have a bunch of, and I cover some of this at the beginning of the video, but below you have like the overall tick, and then you have the advanced decline for all of those. Then you have the NYSE tick only, right? So you can keep track of that. And then the NYSE advanced decline, right? And then on this left side, we have E-mini T+1, T+2, and then the T+1 opening VWAP, 30 seconds. And then on the NASDAQ, see, these are the two equity indexes that I trade the most. We have the NASDAQ T1, T2, and then opening VWAP of the NASDAQ. And then we have for the NASDAQ, because it tends to do the highest volume at the beginning of the day, as you can see here. So NASDAQ T1, so this one had 5,500 contracts at settlement. But then look at here, the T1 opening VWAP, it's almost 4,000. Look at the T2. It's at the open, it's actually higher than at the T2 or 2 days ago settlement. So this is 3774, and then the opening 30 seconds is almost 4,000, right? So that, do you think that that level actually matters here on the NASDAQ, right? We'll go back to a chart here. We'll switch it up to the NASDAQ, and then let's look at that level, right? So it's the teal line, opening VWAP, right? Going with the teal over here on this market internals. Anyway, it does matter, is what I'm getting at. It will matter a lot. So I won't go into too much of that, but so that's what that market internals is. But let's go back to the daily TPO here. So these lines up here are all singles. Excuse me. So remember, going back to what we were talking about, this lower low volume area, here's the singles, right? So this is the old RTH. It was butta through that. So I'm going to get rid of that. Doesn't matter. We've already come back through it. We broke it here, and it did not come back and touch and then go. So it was not some sort of false breakdown here and then go. It was breakdown like butta, kind of coming back up through it, and then now moving lower. So, but you know, these singles, would these be useful to overlay onto the smaller chart? Yeah, I mean, we already have these levels here, multi-week. These are still relevant. They will be relevant back on the upside, right? Volume point of control, intraday. And again, this is only RTH. You see this button up here? It's like a sun and a moon and a little circle up here. If I turn this on and it grays out, that means it's ETH and RTH. I'm only looking at RTH right now, right? So for the next day's analysis, I'll always look at the ETH. But on weekends, when I'm looking for big levels, I'll just use the RTH mainly, okay? And that's how I do it. All right, so at least I believe that's where we're at here. Let's see. Yeah, okay, see this, look. Start time and end time, right? And I use the cash open and cash close. Why? Because of settlement. It always used to go to 13.15 because that's what settlement was. A lot of people still use that. You're a dinosaur. You're not following what the logic was for why this was all at 13.15. If you're still using 13.15, you're using it because all the old books prior to November 2021 or November 2020 had settlement at 13.15, or I should say 4:15. Let's see, what was it? 4:15 Eastern. And that's what it used to be. So you're a dinosaur if you're still using that. You haven't understand why we used it before. So anyway, if I turn this on, boom, all of a sudden now it's going to show all the evening stuff. And if you look at the actual chart settings, what it does is it actually changes and it sets this to on, right? Use evening session, right? And now everything will look different, right? You'll see evening sessions in here. But again, I want to see the highest volume daily sessions, right? You can see daily sessions, 700,000 contracts, evening, 57,000, right? This was like maybe a New Year's holiday thing, so it's of course going to be really low. But anyway, I want to look at the highest weighted volume. So anyway, back to the RTH. No such thing as T1. So T1 just for me refers to settlement 1 day ago. You can Google it, John. I would just Google T+2, and then you'll know what I mean when I say T+1. I could just say yesterday's close or the prior close, but it takes up less on the screen if I say T+1, so it's only 3 characters, right? And T2 is, again, 3 characters. And you can see up here on the left, I like to keep things in the header of the chart, or the region data line, I think SCR chart calls it. So if everything gets too long on the names, it'll just push it out and out and out and out. So it's a little bit of my own simplified nomenclature that works for me. So anyway, looking back at the daily, would it be good to mark out the singles? Yeah. Okay. So again, I'm doing the horizontal ray tool, and then I'm doing TD1. What? It's blue. It comes from the daily TPOs, which are blue. The line is blue and it's thick. So I know when this overlays onto a small chart that that's where this is coming from, right? So we'll do this. So we'll say singles from what day? Singles from 1/5. Okay, so I'll right click it, modify text, and then I'll say singles, or I'll say 1/5 singles. Okay, and then do the same thing for the second set. 1/5 singles, second level. All right, boom. I am still swinging stocks indigo. Hey, Jack London, you're welcome. Hey, Jack, were you the guy that talked about the COT and sharing the what was it? Overlaying the COT? Was that you? Anyway, I'll look for your comment because I tried to make that work and it doesn't work. So if you do it correctly, then yeah, I'm ridiculously curious on how you. No, it does not work. Do you actually do it? So here's the problem, right? You see that this is COT S&P, right? I want the COT NASDAQ, not S&P to overlay. I don't care about the COT E-mini. I want the COT report for specifically the NASDAQ. If you're referencing, say, this chart, right, here, then you're referencing the S&P COT, right? If you're adding the COT for the NASDAQ, right, using the same API, then that's a second data source, and now you're overwhelming the API. So I'd love to hear if I'm doing something wrong, where I'm doing it wrong, or maybe where I'm misunderstanding you, right? Or maybe you assumed that I wanted the COT from the S&P on the NASDAQ, and that's not what I want. I want the COT for oil. I want the COT for gold. No, commitments of traders. So John, Google commitments of traders parenthesis COT, and then just include in the search bar chart and CFTC. So Charlie, Foxtrot, Tango, Charlie. I have one COT study at the ES. If I had two COTs at ES, let's see. I see. So what you're doing is I'll try it that way. So you're making let's not dox myself here. You're making a second COT on this chart, hiding it, and then making it for the NASDAQ, and then doing an overlay onto the NASDAQ. And because this chart's refresh is exactly the same, it'll refresh each of those studies at the same time, which then won't trigger it won't trigger a certain number of API calls sort of offsetting because it's not different charts. So it's triggering what the API call at the same time for both of them potentially. Is that am I understanding that correctly? Oh, yeah. But maybe my explanation is I realize there's a delay here. But you have the COT data. All right, see you, Indigo. Yeah, just for ES. Like I said, I want it to be for the NASDAQ, right? I want to import the COT for just the NASDAQ, right? So when you're looking at the studies, there's at the top, there's the study for the CO2. There's a top that is a drop down for like the ES, for the NQ, for oil, for gold, for treasuries, etc. That would be a different API pool. So I don't know, Jack. Hey, Jack, man, if you could come onto the Discord and maybe share screenshots, and I'll share mine or something with the API keys, uh, like grayed out or whatever. That would be cool. Hey, Nan, I hope you're having a great weekend too. Thanks for stopping in, my friend. So anyway, let's go back here. So I've got the singles in here, right? So this is sort of a top of the range. Let's see. This area here, I want to get rid of because I want to be a little bit more granular with that level. That was a gap that now filled here. So the close to the open is the orange, right? So there's the gap. We filled it. Bing. There's a gap here below. Okay, that's still there. A bunch of singles down here. Now, is it time to note the singles maybe here? Does that matter with just a tiny amount? Right? Notice we filled the singles here on the ES. Right up at the top one here. And then bounced. Okay, so these sets of singles down here, would they potentially be important? Yeah, potentially. So there's singles here, singles up here. So this one is a little bit interesting in that we have a little bit of volume here, little bit of volume here, right? I noted the one only at the bottom, singles fill at 4604, right? So that's like the last set of singles from this extreme buying day. Then below that we have a gap. I'm going to leave it as is, right? I'm not going to put levels all the way across up here because if we break down out of balance here, yeah, you may have some intraday scalps, but we're likely to get volatility, and I want to play what I think are maybe more important levels. So right here, this is a volume point of control. I do want to note that. Let's see, what day is this? 12/21 VPOC. So right click, modify the text. 12/21 VPOC. Oops. All right. So there you go. I think we have most of our levels here for the E-mini. Oh, this is the NQ. Oops. Boy, oh boy, look at how clean that is. Look at that. Bing, 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 bing. See this? Bing, bing. Look at that. Bing, bing. So interesting. I think it's interesting. Right? Right into this same level? What? Approximately about the same. Ooh, interesting. Anyway, just a tease now. Okay. So let's see. Looking at basic support and resistance here. And this is a volume chart, so, right? It's just interesting to see the way price moves out, right? Little double bottom there. Whoosh. Whoosh. Let's see. Looks like there was a buyer here. 1, 2, 3, 4. Probably an iceberg here. Intraday. Moved a little lower. Whoosh. Right off. And then defended again. Whoosh. How do I know it's an iceberg? Why? Because look, it doesn't move off of that level. Look. See? See that right there? It just holds it. And then look here on this delta right here on the right side. See how it's all red? That's absorptive. See that? It's right on that level. See that? So you know it's an iceberg on that level. Now let's go to the footprint. See? Do you really need a footprint to look at icebergs? Do you? Everybody's always like, oh, I need to see it there, or I need some sort of iceberg indicator. All right, what was the level we talked about? It's this here. See it? 46, 55, 25. There it is. There's all the negative delta. Iceberg. And then they came back down to it. Hardly any volume. Little double bottom. So anyway, I don't really need to look at this chart to know if it's likely an iceberg, right? I can look at this and see the same thing, right? Price coming down, never breaks that level, just goes sideways. These are 1,000 volume bars. I can go look here at volume and see, oh, volume spiking exactly at that level. Oh, passive delta, right? You've got bid side delta or bid delta or bid volume. That's volume that hits the bid, right? And so it turns red. So we know it's what? It's bid volume. It's a passive buyer refilling at that level, and people are selling into it, selling into it, selling into it. So a player is accumulating without putting size on the book, trying to be sneaky, right? If you're on Thinkorswim or something like that, you're never going to see this. The data, number one, is aggregated, not tick by tick data. Number two, they don't, because of that, you'll never have the right deltas at levels, and they don't even have anything like a footprint or delta aggregation at ticks that can be right because their data's batched. So it's really poor data, which is why you pay more in commissions and why you don't pay a data. You don't pay for data. You don't pay for the CME exchange fees and all of that with a futures like you would with an FCM. So there's lots of benefit to use something like this because you get to see into the way that there's a passive buying or whatever at each level. So that's what this is here. This is volume profile, but then this is the delta profile, right? And so when it's nice and big and red, that means there was passive bidders. People are putting an iceberg at a level, and it's refilling every time it gets and fills those orders. It instantly adds more to the queue, right? And so the next orders, they go, it's FIFO, first in, first out. So if there's other orders sitting there, it goes to the back of the line until all the other orders fill for other individuals or institutions, and then they fill again, right? And so once all the small buyers run out and they're the only ones left, then they just keep adding on their own. But undoubtedly, right, those of us who use footprint and maybe want to try to front run and get in with that buyer, we're also going to be adding to that level. And so if we add while an order is being depleted, we're next in the queue, and then our order fills, and then if their order completely fills and there's still more iceberg or there's still more orders left to fill on that iceberg, then they add to the back. So that's FIFO, first in, first out, right? And so doesn't mean that this is one buyer for, what did we see on the footprint? It's not one buyer for 3,200 contracts. Maybe 50 of us who use footprint, we're all buying 3 contracts. So that's 150. And then another institution or an algorithm goes, oh, there's an iceberg there. And so then they start buying the level too, right? So the actual iceberg might be 1,000. It might be 1,500. We don't know, right? Because everybody else is noticing the same thing. Oh, hey, there's an iceberg here rebidding, so other people jump in front too. So the iceberg might be only 1,000 contracts. They might just be averaging in, right? But all of a sudden, if you have, say, 10,000 here or something, or 6 or 5,000, well, that's a pretty big player, most likely, right? But this, I don't know, might have just been other players. And then, you know, when price moved up here and then it came back below, this may have been this little run below this level may have been all the retail traders who put their stops right here. And then once they all triggered, the algos just pulled the book or something, right? And then, whoop, this was the bottom of the stop run, and then they bought it back up. Who knows? Who knows, right? There's lots of ways to interpret this, and who knows which one is right. But, right, I'm just dropping a little knowledge so you guys know that this isn't absolutely what this means. Is that there was an iceberg for 3,264 contracts. It might be an iceberg for 1,000, 1,500. Again, we don't know. Some programs may be able to figure it out if it's a native iceberg, because a native iceberg has a unique order ID, and then, you know, your trading algorithm software, if it has MBO data, full MBO data, like say Rhythmic has, where they share the unique order IDs with software programmers, stuff like that, then they can actually look at the native icebergs. But there's also something called synthetic icebergs, right, where there's co-location and the icebergs are hosted off exchange, off CME exchange with co-location, and then the unique order ID is different, but it's still an iceberg, right? So there's no way in that case to know that, oh, this is part of the same unique order ID, and then now we can tally the total or see how big the iceberg is. But for native, yeah, you can see that. So again, I don't see that data. I just know all of that exists, and that maybe other individuals can look at the native ones and once in a while go, oh yeah, there was an iceberg here and it's about 1,500 and it's native, right? And so we actually have the data to compare that, and we know it's an actual native iceberg of 1,500 lots, or maybe it's an actual native and it's 3,500 lots. Well, then that would absolutely mean something, because it means it's one buyer for 3,500 lots, right? There's algos out there that will turn on when they see other icebergs and do 25 lot icebergs or 50 lot icebergs or 100 lot icebergs to buy with that player, right? So if a bunch of these are all turning on, you might have multiple icebergs on a level, because you know, people are programming their trading system to notice, hey, you know, the bid is only X size, but the amount of selling or the amount of absorption there is, you know, X% greater than the standard bid size, and so we assume that's an iceberg or HFT buying, whatever it is, right? It's refilling. It doesn't even have to be an actual iceberg setting. It could just be HFTs refilling every single time the order quantity gets below 20 at a level, and so then they just refill it, right? Lots of ways for people to buy without being an iceberg as well, right? So again, at the end of the day, that's why I just say volume is king, right? And is it passive or is it aggressive, right? Knowing whether it's an iceberg with 100% certainty doesn't matter. What matters is someone is spending a whole lot of money to fill at that level, right? So that's what matters. So you can don't get too caught up in the whole iceberg thing. I know there are some book map people that just they swear by it. But you can ask yourself the question, if it's a notable iceberg, is it because it's an iceberg that it matters, or because high volume is occurring there? If it's the latter, if it's high volume, well then of course it's always going to you're always going to think there's some correlation with iceberg, right? And you're going to think that's the thing that matters, but it might actually be volume is the thing that matters. And if that's the case, well, then maybe if you're paying for something that shows you icebergs, maybe you're overpaying for that, right? Yeah, anyway. Just showing you that. Oh, I think I was going to talk about the imbalance settings for the number bars, right? You see how these things are extending out, and all of that is this setting here in the number bars. Settings, scroll down, Yeah, Nana, I do the same thing. So these time and sales are all filtered. So what I do on the time and sales, let's see. Cal asks, is that just CVD? Is that just CVD? I'm assuming you're referring to the footprint. And the left side of the footprint is cumulative volume delta at tick, right? So ask volume minus bid volume, right? So if something, let's say there's a bid and then an ask, and everyone's hitting the bid or hitting the ask, right? It tallies that volume, and then, oh, the book moves up, and then all of a sudden they start hitting the bid. This would be ask volume minus bid volume. So let's say if 5,000 hit the, let's see, let me see if I can do this right. At this level, 100 contracts hit the ask, and then 3,364 hit the bid from this level, right? So we're aggressively selling into the bid. It would be a negative 3264 reading, right? So it's ask volume minus bid volume, or delta, right? Net delta at tick, right? So a lot of people use cumulative volume delta as like an indicator down here. So I just didn't want to confuse people by saying, yes, it's cumulative volume delta at tick, right? A little bit more of a granular explanation about that. So bid volume, volume that hits the bid, ask volume, volume that hits the ask, right? So if it's ask volume minus bid volume, and it's a negative number, right? Then you know that the bid volume is much greater. In other words, the passive limit orders are getting hit on that level more than the passive limit orders that may have been hit on that level. Because right, we know the book moves up and down and everything, so it's just tallying all of these levels. Right, here's another one, negative 2,300. Here's another one, negative 1144. By the way, something we noticed, 5 points apart. Boom, 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 right? Someone was massively scaling in 5 points apart. 1, 2, 3, 4 different orders, right? And so as you can see, as we moved above here, aggressive buying. And then into this level, aggressive selling. Aggressive buying, aggressive selling for more contracts through here, right? So you can see if players were averaging in, because this is pretty systematic, every 5 points, then where's their average? In the middle somewhere, so right about here. Anyway, looking at this, these settings for these yellow lines, they are found. Highlight non-zero. Okay, let's see. I think it's this one. Yeah, highlight non-zero bid ask at high-low threshold, 25, right? And that just sort of shows you where the the tapering didn't at the high or the low, there's at least an ask bid difference of at least 25 contracts. So in other words, it didn't taper out like this, where it's 100% delta, meaning negative 25 delta to 25 total volume, right? So it's 100%. So that difference being, if it's not, if it's a 25 or greater contract difference at these lows, it'll then paint this line and extend it. And then once it intersects in the future, it obviously goes away. So I've just been sort of monitoring these things. It can show aggressive buying essentially, because in this area, the ask was on this yellow line, and then the buyers just hit it, right? Which is why you get like, it's not 100% delta essentially, right? So it's not, the delta number doesn't match the volume number, right? So it just shows, it can show you aggressive buying off this level, right? Which was, this 46.57. So they aggressively bought, and you can just see even by sort of this area, like, so So it was bought, but then it was also passively bought through this level. And then it was, again, aggressively bought. They bought through all the volume here. And then, again, once it broke the top of this candle, you see how the volume sort of dissipates up here? Why? That's all stops. Bing! Right? Because everybody puts their stops above the wick. So low volume, bing! Shoots up, takes out these. I'll bet you in the moment this triggered a bunch of stops too. Right? You can see there's a little bit of volume here. 1100, 800, 300, 500, 700, then 100% delta, 36. Tapers, aggressive sellers. So longs wanted to get out. Next candle came back, tested the breakout zone. Low volume, filled in that 100% delta number. See that? Tapered out, 100% delta right on that level, right? So everybody who maybe had buy stops up here to get into a long position, if they move their stop into +1 or +2, they got stopped out. You see how it's important to let your position run? Don't just put a buy stop, goes into profit. Oh, one tick above, take profit. You dum-dum, you probably get taken out every single time on these kind of moves. So don't do that. It's really, 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 really dumb. Let your position run. Don't do this whole +1, +2 into profit. They're going to come back and take you out. Why? Because, you know, you're weak hands. You're weak hands. The market oscillates often in a way to take out all these weak hands. So, you know, don't trail your stop 1 or 2 ticks into profit, because then what you end up having is overall your risk reward. We'll use a little risk reward calculator. Is you have, this is your stop loss at the bottom, this is your entry, and then this is your take profit. So you see your risk reward. If you get stopped on a bunch of these trades like that, oh, I'm making money. It goes all the way. Look, it goes all the way up like this. And you're like, well, I want to at least guarantee that I make money on this trade, right? So that's this area here that we're doing. And then it comes back. Oh, we'll make it red. Comes back down. Boom. Takes out your stop. But what happens for a lot of people is that they do this whole thing, and they get always stopped out of trades with 0.3 Rs. But then what if you're wrong on the trade and it goes all the way down? You enter here. What, are you taking your full stop? So if you're right half the time on trades, but your risk reward is this, what even if you're right? Oh, I don't know. If you're right 70% of the time, are you going to make money if your risk reward is, you know, somewhere in here? Let's say, so if your average risk reward is something like, oops, like that. Oops, a little too high. Right there, 0.4. Put it into a Monte Carlo, right? If you're right 70% of the time with 0.4 Rs, or can you still be profitable, right? Generate that Monte Carlo simulation for 200 simulations or something like that. I have a Monte Carlo simulation video, so go check it out. And in the video description, I have a link to somewhere that's a free Monte Carlo simulator generator, and you can put like 200 simulations run at the same time, so randomize your distributions of wins and losses. Go put this in here, 0.4, and then find your win rate on how you trade like this. Is that going to be sustainable trading if you win 70% of the time and are at 0.4? Go put it in. Go see what your equity curve looks like. But anyway, look at me, how I get caught up in these this rabbit trail here. So anyway, done with the E-mini, and now just sort of looking at support and resistance levels here. Hey, let me go look at the chat. What have I missed? You're referring to the study in region 2. Yeah, I'm going to leave this stream up. Sure, absolutely. Which is why it's DVRable right now. You can rewind it, so I will definitely leave it up. This will be my weekly YouTube video. So anyway, with time and sales going back to, who was it, non-deal? what I do for time and sales is combine records. I do with same price and type. I am showing grid lines here, and then the columns are time, price, and volume, because sometimes you're in Globex and you want to see what was the last trade, right? And then on this highlight and alert by field, I'm doing volume, and then I'm going greater or equal to 25 highlights. So I have the color row checked, and then it colors that row according to my global graphics settings for that field. All right, and that shouldn't be very hard for some of you to go look up or whatever. But that's what Nan was talking about above in the comments, where he says, love the filter time and sales for spotting accumulation distribution, because what will end up happening in the time and sales is you'll see at a price, you'll see the number of contracts or volume will start to spike like crazy, but the price won't even move here, right? And that's what those settings that I just described actually allow you to see. And so you get to see the volume just build. And then that's also why I have on the DOM, I have volume here, and then I have delta on the right side, and then pulling stacking here, right? So that's combined pulling stacking, and then this one's buy, price, sell. That's it. And then this is delta at price, right? So ask volume minus bid volume with the bars and the delta, right? I use a volume profile overlay, one for this side, one for that side. I make this right aligned volume profile, and this one's not right aligned, and this is all volume, right? So then we get to see total volume. So we could see here on this, well, maybe you guys can't see, there's 2,867 contracts here at 46.67. 2,027 negative deltas there. So there was an iceberg here, which we were watching after hours in Discord as we were talking about markets. And they finally broke through it, right? So, a little iceberg here for who knows how many contracts, but someone was buying this level. And we know what the deltas of the volume are, right? So roughly, I don't know, 60, 70% of the volume transacted there was all passive buying. So that's why I have this here, because this is net delta, but I also want to see what the total volume is on that. This might be 2,027 passive buyers of 15,000 contracts. Well, that's going to obviously mean something different, right? So let's see. What else? Oh, Thinkorswim. Yeah. So I am going to turn off this screen, I believe. Let's do this. Should be a blank screen. I'm going to go ahead and log in. To think or sync. And then, let's see. Yeah, so HZ Meister says, what chart do you focus on most when you're trading? Depends on what I'm trading. So sometimes I'm trading only NASDAQ or mainly NASDAQ because that thing moves like a beast some days. And other days it doesn't. But the ES, I mainly focus on trading equity futures. But again, I got the DOM open for CL and GC down here. The 4 DOMs with time and sales are from left to right: E-mini, NQ, CL, GC. And I would say that that is the those are in order of importance. So how many trades do you take on average? So some days I trade like 40 trades. Other days I take 2 or 3. It just depends on the market, how well I'm doing that day, how many setups I see. My typical hold time, if I'm scalping, is around 3 minutes. That's for winning trades. For losing trades, I'm right around 2.5 minutes. That's improved a lot. I used to hold my losers a little bit longer. And I've gotten better at letting my winning trades just develop and hit targets. And I would say my average take profit is around 3 points. My average lot loser is around You know what? My average winner is probably 2.5 points. Sometimes I don't get the full 3, but most of my setup intraday when I'm scalping, say for the E-mini, is a 3-point take profit, 2-point stop loss. But I would say a lot of my losers are 2.5 points, and my winners are 2.5 points. Probably skewed a little bit more to the downside on my winners for scalping, and I have a high win rate. So if you put it into Monte Carlo, it's good, and it is good. So that's what it is. You know, usually my profit factor, or not my profit factor, but my risk reward is usually around 0.9 on average, and then my win rate is above 80%. So it's that's just how it works out. I've tried to focus on getting above 1R with the very high win rate, and it's very, very difficult. So most scalpers that have like 90-95% hit rates are probably around 0.5 Rs to 0.6 Rs, meaning when they do stop out, it's usually a bigger stop. But that's a really, really hard strategy to do unless you're very talented, and there are some talented people out there, so they can make that work. But you just gotta keep in mind that when you do stop out in such a thing, you're gonna, if you lose 2 or 3 times in a row, it's gonna hurt your intraday performance quite a bit. And so you have to know that you have edge over the long haul, and you got to keep playing, and you got to not let it affect your psychology too much that you've had bigger losers consecutively, right? You just got to keep playing, and if that affects you, well, then you have to maybe look at the statistics a little bit more and try to reason with yourself that you're still doing the right thing. Or if you can't convince yourself by using logic and Monte Carlo and looking at your stats, try a different trading strategy. Maybe you go for 1, 2, 3, 4, 5, 6, 7, 8 Rs. But in that case, you know, the higher the risk reward, always the lower the win rate. That's almost always how it works. Because if you plug that in to a Monte Carlo with, say, a 60% win rate, and you're an 8R trader, so your winners are 8 times bigger on average than your losers, you will own the world in a very short amount of time if you continue to scale up on your account size. And I don't see any trader owning the world, so therefore I don't think that there are any traders out there that are doing that for very long. Right? You may have a week or two of being successful in that, but long term, no trader owns the world, right? So we know that that's not realistic trading. Yeah, HC Meister, excellent question. It makes a lot of sense, and that would be a question I would ask. So anyway, the screen is still blank. Let's see, I've got Thinkorswim open. I wasn't adjusting everything, so I'm going to go ahead and put this on a chart. It's almost ready. Actually, shouldn't have taken that long. And I'll show you guys what I do on the Thinkorswim side of things. Let's see. Let's go look at this. So this should be good to go. You guys should see this. Let's make it nice and big. All right. We'll just get rid of some of this stuff up there. All right. Shows it's maybe part of the account number. So we'll get rid of that. And thanks, Juan. I appreciate that encouragement quite a bit. You guys staying active in the chat keeps me here and keeps me motivated. Otherwise, for me to just talk, oh gosh, I do so much of it during the week on Discord, or it feels like a lot, I get burnt out. Anyway, let's see here. All right. I'm guessing you guys can see the Thinkorswim screen here nice and clearly. You know, I wish I was doing this in Discord, and then I guess I could do it in Discord and then also record it to OBS and then upload it into YouTube later. If it was in Discord, all of you guys would be able to be on voice and talk to me. in real time. That would be cool. Or actually comment in real time, then I could respond much more clearly. Ah, nice, Cal. Ah, appreciate that guy. Okay. Let's see. I just want to make sure you guys can actually see this Thinkorswim chart. Let me look at the YouTube here. Yeah, okay. Cool. All right, so here's what we have. We have the NASDAQ 100 in Thinkorswim, right? And what I've done is on these watch lists, I've found this thing called, so this is going to be important, market. Just type in market cap by dollars. See that? Market cap, comma, whatever, $M. A dollar sign is of market cap, right? And so when you add that, you can actually filter by market cap now, right? And so that's what we're doing, right? We click on it, and then boom, Apple's sorted number 1, then Microsoft, Google, blah, 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 blah. So I do these in order of market cap or importance. I could do the same thing for the S&Ps. Let's start with the S&P, since I guess I did E-mini and not NASDAQ futures, but there's going to be a ton of crossover, right? So anyway, let's go into these lists and let's go find the S&P 100. There it is. All right, it's in N and S. You guys should be able to see all the letters now, I'm hoping. Yeah, YouTube doesn't like real time. Okay, so here's the S&P filtered, same thing. A lot of the names are the same, so let's start with Apple. So here's what I do. Okay, this is a 10-year daily. That just happened to be what I was looking at when I was looking at Tesla. But what I do is you have charts, you have flexible grid, you have product depth. I go to flexible grid, and on my flexible grid, essentially what I do is I customize the grid to show me a weekly, a daily, and a 20-day, 30-minute chart. So this is 3-year 1 day. This is 10-year weekly, and this right here, excuse me, is 20-day, 30-minute. And you do that by customizing, and then you save the flexible grid. And when you save it as something like this. And this is the only flexible grid I have saved, 30-minute, daily, weekly, right? So it just describes the flex grid chart, and you can move, let's see, you can move all these screens around, look, right? If you want to move this up, right? You can do as many screens here almost, I think, as you want, right? And you could break them up, you could split them, right? And so, you know, all these screens are linked. So, you know, when I click on Apple, I'm seeing the setups for everything, right? So we'll just double click this. We'll look at the 3-year daily. We'll look at the weekly, right? And we see here on Apple, we broke out of this channel, we are in a trading range. This is a healthy thing. I'm sorry, I know everybody looks at this as like, oh, Apple's pulling back. No, this is a good thing. You want this thing, you want this thing to go sideways like this, and then about the time it comes into this area to start breaking up, consolidate, and then keep moving up, right? So Apple is in a trading range. It is not bearish yet at all. Okay, so when I'm thinking about Apple, the highest market cap stock, I'm thinking Apple is in a trading range. It's getting low to it's getting towards the bottom of its range, right? It broke this local trend line here. You know, Simsum, I would rewind the video back to the beginning and see what I said about it there, because I kind of already covered all this. So, yeah, I would just watch the video, my friend. I gave a lot of scenarios and what potentially would happen for breaks of each one, and that's a lot better than just saying I think this is going to happen, right? I have different scenarios, and if one of them starts to play out, then I'll start thinking that way as the week unfolds. But essentially, you guys were talking. Someone asked me early on in the live stream how big is my not my time frame, but how big is like my overview. Let me see if I can, I'll scroll back up. How broad is your trading perspective? Philip Lisiak asked much earlier in the live stream. And so this right here is part of my perspective, right? As I start to chart Fat Man G, which refers to Facebook, Apple, Tesla, Microsoft, Amazon. Did I already cover that? Netflix, Google, right? Fat Man G, or Fang Man T, or Fang, or whatever, right? These essentially just refers to the highest market cap, and the market cap's all being sorted here, right? As I start to go through each one of these, I'm ticking off in my head, right? Is Apple likely to keep going to the bottom of the range, or is it going to maybe pull back here pretty soon, right? All right, so that's what I'm looking at, because Apple is going to be a major contributor to what? The movement of the S&P or the E-mini, right? So here's Apple coming down, broke this part of the range, big wick, into these wicks here where there was aggressive buying on Apple off the 20 SMA. We're now finding a little bit of support. This is so normal for range trading, is when markets come up, they come down, try to make a new all-time high. They can't. And now it starts to consolidate into a multi-month or multi-week range. We're heading towards the bottom of the range, but we're not at the lows yet, right? So we broke the short-term trend line. So we're not just going to keep rallying and rallying and rallying. So we're more likely in a range. Okay, so let me see. Let me remove the drawing. So you can see I have an alert. If Apple crosses what? Below trend line, then give me an alert, right? I also want to have an alert if it comes down to this low volume area, right? Because if it's in a range, maybe I want to be a buyer of Apple down in 168 or something like that. Yes, could it be a double top? Sure. But every time you assume the most bearish in a bull market, you're more likely to get hurt than assuming buy the pullbacks in a bull market, right? So you should continue buying pullbacks in a bull market until some bigger structure fails. And that will make you typically, on balance, the most amount of money, okay? I'm just saying, yes, it could be the big one, right? But that is historically about the best thing to do. So what am I going to do? I'm going to go here, go to about the bottom of the range, low volume area, and I am going to assume we're going to maybe bounce. But does Apple have some downside left in it? Potentially. What do you think that'll do to the E-mini futures? It'll probably weigh it down a little bit unless other things rally. Okay, so let's do this. We'll do, create an alert. We'll say at or below 168.69, and I just want to get an alert on my phone, on my desktop platform that I'll be having open. Okay, so that's where Apple is short term. Right? We know it's been selling off on this 20-day, 30-minute. We know the weekly looks like it could be in a range. Could come all the way back down here and still stay bullish. All the way down to this breakout zone would be just fine. But I think it'll probably stop around this area and range out a little bit. That's, to me, the most likely scenario. Most people think very linearly about markets. Oh, we're selling off. Continue sell off. But markets bounce. And so what I look for is the highest, what I think is the most likely to occur, right? Everybody likes to think, oh, it's dead. Alpa's going back down, right? Oh, look at this move. Unsustainable. Yeah, it was, but it pulled back. It formed a triangle. It pushed up. It then held lows. It consolidated again and then made a move higher. This is how markets behave, especially sustainable markets. So this is quite fine, okay? So anyway, Apple done. So what do I think with Apple? Okay, subtle in my mind, neutral to bearish, but coming up to bottom of range. So further downside, finding some support might be likely. Now I tie that back into what I've charted on the E-mini. If you were here at the beginning of the live stream, you know what I said, right? I know what I said. Based on the daily structure, all the notes that I put on my TPO, it might actually correlate for a little bit lower than a bounce. Potentially, potentially. We've only done one symbol, but it's the highest market cap symbol. Okay. LVN close by an Apple. I agree. Yeah. Okay, so here's Microsoft. Microsoft tried to break out. It failed. Now has come through the bottom of the range. Okay, what does it look like? So this is the daily. This is the weekly. This is the 20-day, 30-minute. Yeah. Yep, I agree. Juan Lozano says, rather miss the pullback short than keep trying to be part of the short. Yeah, I mean, again, when the markets break big structure, you're going to see it, you're going to know it. And, I mean, if you want to try selling tops based on resistance and go short, be my guest. There's probably some money in that for you. But selling the low end of a range, it's a perfect way to get chopped up. So if we break that range and don't fake out, maybe we break the bottom of a range, come back up, test the range, and then continue down, go for it. Now you have structure to play to the short side to put your stop. You have an area to put your risk at. But just blindly trying to sell tops or even buy bottoms without having any structure for risk, that is what blown accounts are made of. So don't do that. So anyway, Microsoft broke down out of the bottom of the range, right? So we had this fake out move. That's not quite the most bullish. Microsoft, what? It filled this gap right here. See that? There's a gap. Filled it. Now it's coming back up. So that's interesting. I mean, it was a pretty healthy gap that we filled on Microsoft. It came down here. This was what? Breakout right here. It's kind of on support. Could Microsoft sell down a little bit? Sure. There's a little bit of fear in the markets, right? If big money made it really, really obvious all the time and didn't let prices fall and take out weak money's stops, then not everybody, too many people would be on the same side of the trade. And if too many people are on the same side of the trade, then they all have to sell at some point, right? So big money is always looking to shake out the little guys before they take it up. And so then maybe that helps you when you're forming your strategy, like, a vast majority of traders might be bearish here, and maybe you look to buy the reversal off the fake out, right? To me, those are some of the very best setups that occur in the markets. All right, so looking at the daily, we've got this structure. Keep in mind the lower trend line, which is a little sloppily drawn here, not perfectly to the bottom of the wick. That's okay. Look on the weekly, potential trading range. Okay, so Microsoft at the low end of the range, likely to bounce up. It's a bull market after all, right? But maybe this is resistance too. So maybe Microsoft tries to rally. Apple, maybe at the bottom part of the range. Okay, so now so far we've got Apple, kind of lower part of the range, kind of neutral, potentially selling off more before a bounce, but a bounce likely. Apple already bouncing, or Microsoft already bouncing, filling the gap, right? It may try to bounce. Okay, how does that weigh for two of the biggest market cap stocks towards your thesis of if they're contributing to the S&Ps or the NASDAQ specifically, right? Because the NASDAQ has been what? Much weaker, right? And these stocks here in the NASDAQ weight much more highly, right? They're a greater percentage of that index than they are the S&P. So maybe the NASDAQ, which has been a lot weaker than the ES, maybe it bounces harder. Intraday, does the NASDAQ do that? Does it often make outsized moves compared to the E-mini? Yes, it does. So maybe this whole thesis of, NASDAQ weak, growth weak, is just because due to the nature of the weighting of the constituents of the NASDAQ, it makes outsized move. Okay, well, keep that in mind, right? So, okay, we're starting to form some sort of little bias here. or thesis potentially. All right, so let's go on to Google. John Bree asks, Mike, do you use order flow for stocks? No, I do not. I use candlestick classical charting patterns, and I typically do all of this charting once a week, every single weekend. If I have a little more time during the week, I'll do some charting of the top 25 in the NASDAQ and Apple quickly by myself, especially if the market has changed quite a bit. And I think it's prudent then to look at what these things are doing, right? But I'm not all day clicking through a bunch of different charts when I'm primarily trading intraday futures. I'm mainly looking at the futures charts and playing the technicals just based on their own merit. And there's plenty of setups there for me without having to look at all of these constituents. But for the broader direction, sometimes I do think it warrants a midweek review of, let's say, the top 25 market cap for the NASDAQ and the S&Ps. I think that is a healthy thing to do when the market has made a big move and you're like, sheesh, where do we go from here? Well, sometimes you just look at the underlyings and you're like, oh man, these things are all on support, but yet the NASDAQ might look like it's in free fall or something like that. And if you're feeling unconfident about, it's at the bottom of the range, but you're too worried to buy because you think it's going to break the range and you just don't want to get crushed there. Well, maybe looking at the underlyings will give you a little bit more confidence to actually take a swing NASDAQ or micro trade if your account is smaller, right? So that's sort of the way I use these things. And of course, I set alerts on all these things. Lots of these charts have alerts so that during the week, all I got to do is get that alert, and then I go take a look at the chart real quick and go, okay, yeah, I'll buy a few shares, right? I'll take this with defined risk. And so it takes me less time because I've done all the work on the weekend. So but no, I don't use order flow in the same way for stocks. I used to be subscribed to the NASDAQ and NYSE data feed for Sierra chart that they have. And I mean, it was a little bit helpful when I was trading, so right now I'm mainly swing trading stocks and focusing more on my intraday futures trading. But when I was taking swing trades on Tesla, or I'm not, intraday trades on Tesla a lot, then it was kind of useful to me. But I don't know. A lot of these things, I find it's unsustainable for me to try to day trade stocks and futures at the same time. I'm just limited and I can't do it well, right? So that's just me. But if some of you guys can do it and keep track of it all at the same time, more power to you. I just focus mainly on swinging some of those stocks, and some of the swings are 1 day or 2 days or 3 days, right? Sometimes it's intraday. Like you'll see when I bought Tesla, I bought it at such a sweet price. I sold it way too soon. Way too soon. Oh, it's crazy. But anyway, so Google looks a little different than Microsoft and Apple in that it's come down, it's moved up, it had room to break out of this, and it's kind of breaking this daily range a little bit. And so the next leg down might be here on Google, right? The 200 SMA. But again, it's found a few buyers here, right? And it kind of closed, yeah, at its lows, but low LVN here, low here, and then you've got the 200. So Google, in my mind, is sort of had this wave going on here, and now it's breaking down, right? Closed below this low, so it's making lower lows. It's made a lower high. It may bounce, or it may not, but I would expect it, based on this pattern, to come into this whole area as a trading range like that. That would not surprise me, right? And if it breaks down further, well, then you know. If it breaks this level right here, what, 26.19, then you know it's not looking good. But now we have a way to frame out our risk a little bit. So anyway, Google, I think short term maybe looking like it could head down a little bit more before finding support, kind of like Apple, right? Potential to come down a little bit more and find support. But open to the idea of another bounce here. Who knows? But again, trying to add a little bit more evidence, or a little bit more weighting to the hypothesis of potentially a little lower than a bounce, right? Or a little sideways than a bounce on the indexes, right? Something like that. We'll see. So Google here, I want to set an alert. Where do I want to set an alert? Right about here, right above the 200 DMA. That's where I want to start really paying attention. Okay, so here we go. Create an alert and at or below. So if it crosses at or below that line, notify me. And that's it. Moving on. Yeah, it could be. Intraday. Absolutely. Jack London. Thank you. With hands together. Thank you, thank you, thank you. Appreciate it. Okay, moving on from Google. Michael Puitz is maybe off topic. It's fine, man. It's all good. What do you think are your thoughts on a market replay? Too fake or worth it for building skill? Totally worth it for building skill, right? If you're a intraday trader, you want to know what certain reversals. So here's what I would do, right? I'd look back at the areas on of a chart that have great inflection points, like this, and this, and this, and this, and this, and on 1x speed, start it from the breakdown of this consolidation and how it reacts. And what is this? 11:16 to this reversal at 11:30. That's 16 minutes of watching replay on 1x speed or normal speed. But if you weren't around during this time in the market, or even if you were, looking back at it and saying, well, what's different about this reversal, right? What broke, right? How can I use this to gain edge from the market, right? Maybe something like, so what a great question, right? Something like this. You put a channel on it. It's such a tight channel, isn't it, right? And then it breaks it. It comes back up, holds sideways. What did this move look like on the DOM, on time and sales, right? Review that. Yeah, that's 20 minutes out of your life. But at least now you're focusing on main inflection points here, here, here. Do it. Spend time on the weekends, right? I have a sign behind me that says, in order to become the 1%, you must do what the other 99% won't. So do it, man. Do it. Anyway, do something like that. I think that would be pretty darn useful. Oh, shit. I can't. Sorry. I'm going to have to edit that because I told Google I wouldn't curse. Son of a gun. Yeah, you guys see toss. Son of a gun. Okay, let me go back and I will explain it. Upper display 49. Here it is. Sorry about that, guys. Let's make this bigger. I'm such a noob. Oh, jeez. All right. Yeah, Cal. Totally eye-opening. Okay, so here's the chart. And what I was talking about is look at this area, right? Look at this area. This area, it's a double bottom, right? Double bottom. You'll see it's an iceberg here. You see these big passive buyers here, right? 1, 2, 3, 4, right? Remember I was telling you guys that it was X number apart, right? You see it here, 1, 2, 3, 4. Then what did price do here? How did it react here? How did it react here around the prior days? Oops. How did it react here above the prior day settlement? How did it react here to this consolidation here, right? You could see that this was an area that shorts kept shorting and losing, and then finally, boom, broke out. So why did price bounce on this area, right, where shorts got squeezed? So, look here, right? This is a little consolidative zone. You can see it tightens up, and then breaks down. What did it look like in that breakdown, right? What kind of orders were hitting the bid? What kind of aggression occurred here, right? It bounced below the lows, came back up, probably took a bunch of people who tried to short the breakout here, took their stops, and then continued, right? Came back up, resisted at the lower end of the structure, bounced around, broke back up, took out the stops here, but you can see right at the top of this range, up, pull back before taking out stops, came back in. Anybody who was long here out of this breakout range, they took their stops, came back up. All the fake breakout traders, oh wait, new highs, stop at break even, took all you guys out, right? Back up to the highs. Whoop, rejected right to the tick at these highs. Boom, big pullback, still made higher lows. What did the price action look like on a real-time normal speed chart, right? And so, rejected right up here again at exactly at settlement, the prior day settlement, right, where it's rejected here. What did it look like here on the chart? What did it look like here, right? Could you have taken a trade by doing something like this, putting a channel, right? Oh, break of the channel, stop above what? Swing high or something? Take the breakout. Would it have worked? Would it be good risk reward, right? Practice these things, right? Putting a risk reward tool. Okay, let's assume you just the break of the consolidation, right? But it happens fast, so you have bad location, right? Because it happens fast. Maybe there's some slippage. So let's assume you're down here. Okay? What's your target? If you're going 1R, your target has to be here. Would that have worked out? Sure, right? Okay. What percentage of, let's see, if your entry is 46.8275 and your stop is 46.8550, that's less than $150 stop. Is that more than 2 or 3% of your trading account? Well, if that's more, then you can't take that trade with one E-mini contract, right? How big is your account? So does it work for you, right? So you do things like that, and then look in real time at what the market is, what the market looks like in those scenarios. So there you go. Great question, Mr. Michael. All right. Yeah, don't run on 30x speed. Why? Because your brain can't keep up with that. And that's not going to train you to see what the market looks like in reality when you're on the hard right edge of the chart. So do things just like I don't know, an NBA player wouldn't take jump shots at 10x speed, would they? No, they'd get too sloppy. Their form would be all over the place, right? Muscle memory, visual memory. So do the things that you would do typically. Set up your replays so that they look like how they do in real time. If you do these fast looking replays, those are just cool for furus who are selling you their products, because they get to see what it looks like on fast speed, and it looks really cool because it looks like, oh, it bounced right into that zone, but it's on 10x speed, and it's like, oh, you were hardly ever feeling the heat, where in reality it might have hung out there for a minute or two, right, at those lows. If you're on 10 or 20x speed or speeding it up at those areas, you make your software look super sexy, right? Oh, no heat, no MAE. Whereas in reality, you may have bought 1 or 2 points there and been underwater for 3 or 4 minutes. And in reality, it's too hard of a thing to hold. So you wanna test yourself in real time. Like, hey, this is taking 3 or 4 minutes and I'm underwater, but the trade is still valid, right? And so you want to train yourself to hold trades through that. So things like that. Okay, where was I at? Oh yeah, Thinkorswim. Okay, so I got to turn this screen off. Bing. Okay, back to toss. I'm going to have to edit this stream for the SHIT word. Or I think that's what I said. Although, if you say like a few curse words on a stream, they'll they don't care too much, but whatever. I do say that the videos are not kid friendly, but okay. Man, why are you retracting all your message, John Bree? Those are great messages to see for people in the stream later on. So, well, whatever. It's your choice. Obviously. Okay, Google. Let's see. So yeah, we already had an idea on Google, right? Well, the other symbol we'll ignore. Amazon. Is it in a trading range? Yes, it is. Is it in the bottom of a trading range? Yeah, it's towards the lows of this upper trading range here, right? We could say that easily. These are the lows coming into the lows. A little bit of a, I mean, you're going to find little head and shoulders type things on these things all the time, right? Head, right shoulders, maybe. So, you know, top of head, neckline, maybe it comes down to 29.50 if this is the neckline, and then you might do a measured move, right? So down here, 29.35, which would be what? 29.35. Hey, that would be all the way down here, right? So potentially, Amazon is interesting because, you know, it's holding the upper end of this, you know, this range here, but we have this whole edge down here that could actually potentially get hit. So Amazon could certainly bring down or contribute to the indexes if it breaks below these levels. But short term, right, you want to be thinking, okay, so we have this area of consolidation, doubling consolidation of this area here puts us about right here. So Amazon short term may find, now it's hit here, what, 1, 2, 3 times, right? Coming back for a 4th time. That's, you know, if you had a range where price has already hit 3 times to the top side and it's coming back again, I'd be more likely to buy up if it was the top of the range. So Amazon coming to the bottom here, 1, 2, 3, now a 4th time, doesn't bode well for holding it, but you might get some move and then a little bounce and then a rollover or something like that. You know, I'm just thinking of different scenarios, but Amazon is interesting in that, you know, it's kind of coming back to this range here, 31.65, maybe for a 4th time. But overall, it's in a bullish weekly higher time frame consolidative structure, right? So nothing to get too worried about, but, you know, look what ends up happening, right? When these moving averages on the weekly here, when they start to fan out too much. Look at this. Every time they fan out too much, you get pullbacks, right? Tighten up, you get breakout. So look at up here. Super fanned out, pullbacks, right? Right up here. Super fanned out. Now it's kind of starting to, this 50-day moving average on the weekly starting to kind of come in. This 100-day moving average is starting to kind of try to find, it's coming up to the bottom of high volume. And the 200-day is still way down here. So even if Amazon comes all the way to this range down in here, it's fine. Yeah, I mean, could it be some left shoulder, right shoulder, and then, you know, push all the way back through all this stupidly low volume all the way to 2038? Absolutely it can do that. But until structure up here is broken, don't bet on it. And if you do, well, good luck. So Amazon leaning neutral to bearish short term with the potential for a bounce in the next few days, a small bounce or something like that. Okay, but again, coming back to this level for a 4th time does not bode well for longs. So, all right, put that in the quiver. Tesla. This note right here, I wish I could prove it, but this note right here was created when Tesla, after Tesla had rallied up to here. So this note right here was created when this daily was right here. Believe it or not. That's when that, 11 11/21. Oh, I guess I have the date on there. Yeah, 11/23. So there you go. So yeah, the note still has the date. Duh. And so I was already anticipating that this was going to be a choppy range. Why? Because stocks move like this, right? They move up and they move down and they create ranges and then they break out again. And Tesla's made some massive, 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 massive moves. I mean, look at this. So I think Tesla's going to make some sort of multi-month, multi-year range, right? Lower highs, wouldn't be surprised if it comes back in, fills all this volume in down here, and then just starts chopping around. And then let's see if it breaks up or it breaks down, right? So Tesla is coming down out of this short, everybody liked this short-term line. I get that. We gapped up through it after a little pullback. We gapped up over it on good news, good delivery numbers. And look, now they're still taking profits, right? Bigger money is still taking profits on Tesla into all that short-term news, right? That short-term fundamental analysis based on delivery numbers and stuff like that. Bigger money is looking at the overall picture, right? So they're taking money off of essentially what? 135 Elliott wave. Now we already started a new. This is crazy. I have to change my Elliott waves. But anyway, ABC correction here, right? So where did I buy Tesla? I bought Tesla below $8.99. Where did I sell it? I sold it right in here. So I missed all this to 1200. Anyway, excellent location because of what prior all-time highs. Was able to frame out very good risk with stops under 833. Volume node, didn't even get there. Essentially bought the bottom of a multi-week low, but you know, I guess not diamond hands. Don't sell tops, right? So I caught like 25% of this whole move. Whatever. Take chunks, high probability chunks out of the market. That's where I'm strongest in, right? Some people have diamond hands and they're able to hold. You know, they bought here and they sold somewhere in here or sold somewhere in here. Whatever. That's a huge move. But you know, they've got to buy based on a larger percentage or a smaller percentage of their account. Anyway, you can't risk your whole account on this. That's stupid. You got to diversify a little bit. So anyway. HZ Meister, it does have terrible audio because I sped it up to 140%. Because otherwise it would have been, oh gosh, even more than that. And I cut out whole areas of the, I did some editing on that. Otherwise it would have been a 5 hour plus rant about certain things. It was interesting. I know that people that were tuned in live were probably interested in what I had to say, but it just gets too long. So anyway, yeah, I won't do that again. I'm not going to speed up the audio because it really messes my voice and everything up. So this YouTube will just go up in its entirety at the current speed. See, I'm already at 3 hours, man. And I got to go out and get some lunch here. So I'm going to finish up these last few, but then you guys are going to get the idea of what it is that I do and how I incorporate it into the futures, right? So Tesla, in a pullback, I would expect it to come back a little bit more. They've had some positive news here recently, so it might rally a little bit here. You know, often what happens is when you get this breakout move like this and then it comes back in, it finds all the stops, it comes back up to the trend line again and chops people sideways, right? And so this is a sort of a, here, let me get rid of this. This here is kind of a level, right? Because you have these candles where it pushed off, and so we're now bouncing off that area. So little bounces here. So Tesla probably will be contributing to upside a little bit. If it doesn't, it's had some good news over the weekend. If it doesn't, then the market is likely very weak. Tesla will probably come down and fill this gap down here, right? And so that'll be interesting, right? People will probably call end of the world on markets if markets are falling. All right, so Tesla, kind of neutral to potentially bearish. In the longer term, short term on Tesla, maybe expecting a little bounce, right? So how does that play into the narrative? Facebook, right? Part of Fat Man G. Facebook broke this trend line, pushed up, came back in, now in a little bit of a trading range here. Wouldn't be surprised if Facebook is a bit of a volatile name, but you know, all that metaverse stuff. Wouldn't be surprised if Facebook turns into a longer term trading range. Wouldn't surprise me at all. Here we have a pullback, comes up, makes a lower high, bounces off of what, around 50%. Someone the other day told me fibs are dumb. Who was it? King of Men? I think it was. I respect that. I get that. Fibs are pretty dumb if you blindly use them, but I kind of use them to help me fade the crowd sometimes, by the way. So I do use them because so many other people use them, and then I use that to if we bounce directly off of a fib level perfectly, then it kind of gives me I use it as it gives me an idea who is playing and how the market is respecting more of these perfectly precise levels. It's almost like a weak high, weak low type of thing. Same idea. Or poor high, poor low. Like what? That's a market profile thing. Okay, so let's go put a fib on here. I'm going to say it's around a 50%. Let's see, retracement. Fib no, that's not right. Add drawing. Where's my fib? There it is. Here. See that? So around the 50, about halfway. Right? Markets like to do this thing where they bounce about halfway up. So anyway, bounces about halfway up, makes a new low, and then a really springy bounce. So lots of interested buyers on Facebook, right? So when you get these massive bounces like this, that typically shows there's a lot of interested buyers. So that tends to make me think that we're going to likely be in a trading range. There we go. So we're near the bottom. We had a big day. I don't know. Maybe a little choppy on Facebook, right? So neutral on Facebook, right? We want to look at Berkshire. Look at that. Breakout. Look at that. Berkshire Hathaway B. Look. Beautiful. All right, let's put the oops. Oh. Berkshire meeting almost now at about 100%. But closing on the highs, it'll probably breach that. But if you're long Berkshire, maybe take some off in the coming days a little bit. But look at that. Look at that. So good old Warren positioned well. So look at that move. Really nice. So Berkshire probably going to see some profit taking after maybe a little move above that 100% of this balance area. Yeah. I've been calling it last week on Berkshire. So I do these on Discord, and I covered Berkshire, and I said, don't sleep. It looks good. Anyway, NVDA. Closing near bottom of range. It would not surprise me for it to come down into this area. So you can see I have already an alert down into this area. If Berkshire tries to do a false breakout, I want to be involved. Or I'm not Berkshire, but NVIDIA. Yeah, I need to eat. And I need to get off here pretty soon. No, it trades off of the, it's an index. So, of course, there's some disconnecting. Anyone can come in and sell 5,000 not anybody, but any big boy can come in and sell 5,000 contracts or whatever, and you know the underlyings may not even move, or it may cause the underlyings to move a little bit, but you're going to have hedging firms that come in and instantly buy up that difference, right? So they can buy and sell stocks to what is it? Gosh, can't think of the right word. Again, I'm getting a little tired here. But they're going to instantly come in and make that market more efficient. So that happens in real time, and that's why you see like all of a sudden a big move, stops hit, and then whoosh, price moves instantly back to what it should be. Is because there's a lot of I can't think of the word. I gotta check the Discord again. Arbitrage. Thank you, thank you, thank you. They're gonna perform instant market arbitrage on all that. So anyway, at or below, I gotta finish this up because I'm starting to head downhill. Okay, let's look at arbitrage. Cal and Sim, thank you. JPM, sort of top of range, gap below. Typically bullish, probably moving upside. We'll see. So I'm a little more bullish on JPM, but it's a messy chart. Visa at the trend line. I think Visa is probably going to come down just based on this sort of little channel that we've been in. Broke up above it, now it break back through it. So maybe come down and sort of test this area here. So Visa maybe a little bit not so bullish. Johnson & Johnson. Upper end of the range. See that? Likely to maybe try and make a move and then pull back. United Healthcare Group. Hey, I like to talk about weekly time constrained things. Okay, so look. You see this balance breakout? What was the move? Here. And then constrained by the weekly, this is daily, but constrained by the week, they show up on the, constrained by this trend line. Breakout, whoosh, right back in. So gap above here. Near support, I'd say support's down here somewhere on this. Wouldn't be surprised for it to come down and then make a bounce. Home Depot in a weekly range. Look, it just in a weekly range. That's it. Hit its measured move objective. Broke outside of his weekly trend lines. Look, so the trend line should extend here. But, a lot of times these things make ranges, right? So weekly range towards the bottom. Still has a little bit more to go, maybe to pull back. Right? We have low volume here. We have a gap here. We've already almost tested the gap. Didn't quite fill it. Wouldn't be surprised to make some sort of multi-month range or something like that. Bank of America, gap below, trying to break out, or it already is breaking out, new all-time highs. This is a bullish looking chart, right? Measured move objective up here at 51.43. We already called this as a potential sweet spot to buy based on a pullback to 43. We're now at 50. Measured move objective up here 51. Then we have what? Weekly constraining trend line up here. So maybe it meets 100% of the balance area measured move. But it's well on its way. So bullish looking chart. Banks looks good. Walmart trading range. Oh, cool, John. Yeah, I mean, it is what it is, right? I mean, so I had a group of traders that we used to look at the top 5. So we looked at FANG. FANG M is what we used to look at. And so each of us had charts, 5-minute charts of Facebook, Amazon, Netflix, Google, and Microsoft. And we would keep it on our screen all the time and be charting that. And it was a lot of work. But what we would do is we'd use it to try and predict where the NASDAQ might go. Because once in a while, you get these perfect pullback setups that would occur on all of these stocks at the same time. And we'd know if the NASDAQ was selling off through support, that it would likely be a false sell-off, right? Or false breakout from a level. And so we used to be able to buy that false and then have really great position and then ride it the other way as all the constituents bounced technically on their own charting patterns, and they would be predictive for the NASDAQ. So that little group of mine, I don't know, I had a kid and some of them started to get into blockchain and made enough money to not really have to trade and blah, 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 blah. So we're not doing it anymore. But that would probably be something if you have a group of traders that you trust and that you could talk to in real time and you wanted to try that as a trading strategy. It probably, now I haven't done it in a while, but it'd probably be worth your while, right? But that kind of indirectly kind of answers the question of, what's leading what. Now, overnight, when stocks aren't trading and futures are trading, then what's leading? The futures, obviously. But what you'll find is, for example, let's say futures are trading lower overnight and stocks are in a downtrend or something like that. And then all of a sudden, overnight, some of the constituent stocks, for like the high market cap stocks, get positive news. Futures will start to rally, right? Traders are trying to price in. Algorithms, institutions are trying to price in the likely open of all of the underlyings. So in other words, did the news for the underlying drive the futures if it's on one of the major market caps? Absolutely yes. So in that case, are the stocks leading the futures? Absolutely yes. But apart from any kind of major news or obvious thing that's a driver for the underlyings, the futures, they can push it around overnight and do whatever the hell they want to do and likely lead some of the stocks lower. You guys ever notice? So at 1 a.m., stocks open. 1 a.m. Pacific Standard Time, right? 4 a.m. Eastern. The pre-market for stocks open. You ever notice that futures, if they're sold off, they get a big rally, almost straight up? What do you think's driving that? It's the underlyings opening at a much higher price, and the algorithms are buying. Is there edge in that? Yes, there is. Do I sleep most nights because I want to trade the cash open? Absolutely. But have I been up enough to see it? Do I see it in the charts? Absolutely, I see it, right? So these things should already give you the answer to that question without having to say, I trust you, Mike, or I trust these other famous traders. Just look at what happens relative to data and understand the story based on understanding that pre-market opens for professional traders and for most non-super retail platforms, it opens at 4 a.m. So like Thinkorswim opens at like 6 or 6:30 Eastern, right? So they don't even allow a lot of their traders to even trade that what is 1 a.m. Pacific Standard Pacific Standard Time. A lot of like these platforms, they don't even allow trading, but other traders who have that access, they like, Interactive Brokers has access at that time. And so I absolutely would buy or sell some of my stocks at that time in that early pre-market before all the retail people are on board and they've driven price somewhere that maybe is not advantageous. So I used to get a lot of sweet fills at 1 a.m. or something, right? Because maybe the indexes have sold off. And so then some of the constituent stocks, whoosh, come down to meet the indexes. And then everyone buys those stocks up. Maybe not everybody, but a lot of professional traders. And then whoosh, the indexes rallied like crazy. Or sometimes there's just a huge arbitrageable difference between the two. And then that's why you see one come up and meet the other. It's almost like the Forex trading where you have futures currencies on Sunday night, where the Forex opens an hour earlier and then futures opens an hour later. You often get that gap fill on the futures, right? And oftentimes there's some arbitrage to be had there every single Sunday night, and a lot of it's still a thing, right? A lot of traders can actually take advantage of that, so it's kind of cool. IBKR is not 24/7 for stocks. But David Trade says, can you go into more detail about that? I'm not sure what he's even referring to because, Again, there's so much delay on this feed. I have no idea what he's talking about. But anyway, okay, Walmart trading range. Procter Gamble breakout. All right, we're targeting 170 on this bad boy. Oh, okay, yeah. Sorry, Juan. Let's see. So bullish. Maybe an example of stocks. I think I gave a whole ton of examples of stocks leading futures. But if you want an actual physical example, you'll have to go look on the charts or anyway. Little breakout here for MasterCard, but you know, higher time frame. This is a tough one, right? Because it it rallied. It's just such a dirty chart, right? It rallies, comes back up, comes down, makes new highs, double top. So all this is going to be massive, massive resistance in this area. So in the range, slop fest. Do it! Do I ever take breaks from the market? Yeah, all the time. But trading is hard. And if you're not prepared in this game, you will not last long term. If you're doing it on the side and you know, happen to, well, yeah, just trading is hard and put a lot of work into it, and that's the life of a real trader. Someone the other day on Discord said, you know, the reason I want to trade is I just want to wake up, trade 2 or 3 hours, and then enjoy the rest of my life. And we all of us professional traders at once started laughing, because that is the dream they sell you. But trading is hard for a lot of reasons. And if it's not hard, you probably haven't been doing this very long. And you've had some early success, and it has blinded you to what will likely happen over the longer term in your trading career. So a lot of the early market wizards say that in their early trading careers, the worst thing that happened to them was that they found success early on and they got cocky and confident and thought trading is easy. Now that after they've been doing it for decades, they're like, trading is hard. Anyway, lots of hope still, right? We have lots of people sharing information for free. The problem is trying to navigate all of that, right? Who's selling you something, right? Who's trying to eventually set you up to sell you software? I've seen so many people on YouTube, or not on YouTube, but yeah, YouTube and Twitter, where these people were like, we'll never sell anything. Well, this is always going to be free. And these are people that seem to have good ethics, and they all end up selling something shortly after, as soon as they get enough followers and enough hype. It's a sad thing. Just be upfront about it. But whatever. If someone's selling you software, ask them for actual back tests. Ask them for account statements. They don't give it to you, send them walking. All right, Pfizer, bottom of a range, likely on support. Michael Pruitt, no, it can't be easy. It's just not. ExxonMobil, breaking out of an inverted head and shoulders. This is a nice chart. Look at that. Look at that. Anyway, I was already talking about this last week, that this is why these lines are here. Left shoulder, head, right shoulder, neckline, breakout. Right? So this thing has a target of about 80 bucks. So let's put this on here. If I was going to sell you something, Michael, I would say, yeah, it could be easy. Here,
buy my chart book off me for $1,500. There you go, $80. I was pretty close. But I'm not selling you anything. I get probably 2 or 3 people a week who find my email address at the top right of my Google header, and then they send me emails and ask me, hey, will you sell me your chart books, all of them? My answer has never been yes, ever. It's always go buy Ticino Trader's stuff. Watch my videos. Learn how to build it yourself. I'm not selling anything, guys. I promise. All this sharing stuff with you guys keeps me sharp. All right, Disney. You see, I had this alert at Disney for 135.46. Sometimes you just miss the bounce, man. That's just how it is. Look, I missed this first bounce. I never got in. Bummer. Anyway, 100% move would be down here at 131 based on like a symmetrical triangle kind of fail. Almost a descending triangle, kind of. I don't know. It's ugly, right? You could say this is the neckline and then this is the descending price action against this. But it made a heck of a move. We were looking at it here when it broke out and said, you know, this thing might have 135, 140 in it. And it didn't quite go to 140. But it still might roll over. Who knows? Might come to the... So I think it's maybe a shortable area right into 166 or something on Disney. I'm usually not a humongous fan of shorting stocks, but let's take a look up here and put an alert. So if it's at or above 167, it'll come onto the radar right there. And then maybe we take a little scalp short or something with 1 or 2 week, maybe a 3 week dated option or something with defined risk, something like that. do Mystic TY, everyone on Twitter hates on Discord, guys, but then go on to sell courses and newsletters. Is that a thing? Twitter hates on Discord? I don't know. You know, I think I follow around 30 people on Twitter, and I just follow them because I find they bring me value. And I check the Twitter maybe at the end of the day, and I'm like, I learn from them, and some of the people I can fade their levels because they have enough followers and they're pretty vocal about a level, and so I'll use it to kind of, when they're too precise. A lot of these, people like to buy certain levels based on what a Discord or based on what a Twitter user will say. This level precisely needs to hold. And then often we'll get a stop run under there, and if I see that in real time, I'll buy it for a scalp or something like that. Because, people tend to put their buys right on the level and then put their stop right underneath in big money. Consents when it's not their contracts being filled. It's a bunch of small lots, retail. And so what do you think they're going to do? Try to go take those retail players at the most disadvantageous exit for those players, which gives them a more advantageous entry. And then they have the liquidity to move the book. So there you go. But let's see. I agree with Juan, who says, nothing is easy at the end of the day. Trading is a constant learning curve. Markets evolve all the time. You have to evolve all the time. You have to keep up with the studying, etc., because markets adapt and will burn strategies that work, especially on lower time frames, Swan, especially. Which is why someone asked me a while ago, hey, why do you share stuff on Twitter or on Twitter and Google, right? If these are strategies that work, if they're strategies that work, like I don't predict ahead of times, but if. I said, because you know what? I'll keep evolving with the market. If everybody starts using this, I'll just see the difference. I'll see the change, and I can read the market in real time. So it's not a big deal to me, right? But the process of sharing all of this stuff and using the Feynman method to try to simplify everything totally helps my brain to streamline my own strategies. And do I share everything? Absolutely not. If there's something that's working, and there are things that are working right now, I don't share them with everybody because I don't want to compete, right? Even 20 traders buying that level in Globex or buying that level that is a level that institutions that I've seen like to buy these kind of patterns or levels, that's going to affect how they move the market. So I'd rather be, you know, one of the few people buying that level because nobody talks about that edge. And if I've seen nobody talks about that edge, I know I'm golden, right? So we're competing. I don't want to, you know, buy 3 or 4 contracts and buy them 3 or 4 ticks higher because all of you guys are putting 20 contracts on a level, or 5 or 10 or 100. I don't know. Maybe some of you have a lot of money. Maybe you're trading your daddy's account in Dubai. I don't know. So of course I'm not going to share that stuff. You guys kidding me? Yep. Anyway, let's see. So Disney, so setting an alert on that, right? It would be a gap fill too to come back up to that level. I mean, the gap's quite a bit higher. So, but I would monitor it, right? Probably put a stop. Oh, I might enter some here small and then enter more up here for more of a gap fill. But I think that this is going to be totally resistive right here, right? So I'd put a stop here. Then if it went all the way up to here, I'd probably enter again with the stop up here and then look for some sort of move back towards the bottom of the gap if it was from up here. If it fills here, it'll probably come back in at least to here, right? So if your stop is above here, your entry's here, and your take profit is in here, you're about 1.5 hours, right? I could just visually see that. Anyway, Coca-Cola. Sweet, sweet move here off this balance area. I missed this one. Bummer, but it happens. It's 100% move is up here at all-time highs. It's now broken all-time highs. It's been pulling back and consolidating. Looks good. Little gap under here. I don't know. Maybe we can buy this area. So let's put a create an alert on it. At or below. Bing. Maybe move it up a bit because these things happen fast. We'll replace it. There you go. So if Coca-Cola tells me something, it gives me a little alert, maybe I'll buy some here. Looking for what? This 100%. So stop would be about here. Underneath this swing low, holding the 10. So 58.32. If I can get in at 59.41, targeting 61.98. Almost 2 Rs. So it's not a bad trade. That's what I'm quickly framing out mentally. But I'm talking to you guys about it so that you know how I frame out trades. But that happens really fast, right? If I buy here, stop here, and I'm targeting here, it's roughly double, so it's 2 Rs almost, right? But I could do that instantaneously. So see how much longer it takes me to go through my charting because I have to talk. I'm trying to talk out all these little steps that are just instant flashes in my head. Oh God, this takes a long time. Okay, anyway, CSCO. I'm not complaining. I'm just telling you guys. I can be a lot faster. So CSCO's interesting, right? It's got a short-term area where the breakout is here. It's on support right now. CSCO's on a buy zone, right? You could probably buy right in this area and put your stop here below this swing low and then target up here, right? It's a major swing. It's a major swing trade, but that's a nice trade. It's a nice pattern here, right? Cup handle, right? So on a higher time frame, this is the target, right? Up here at 89s. Like, what? Hey, it's just the classical charting pattern. It is what it is. Eli Lilly, next. Trading range. Easily a trading range. This is how trading ranges form, right? You come up, come out. Everybody's got this trend line here. Woo, we break above it. Fail, come back up. Don't even make a high. It's a trading range, likely. Okay. Simsum, I appreciate you guys being here. Let's see. Let me see what's going on here with this stream. All right. The stream health apparently is not that great. Oh no, it's good. It's a good connection, but I was gonna try for ultra low latency today, but I don't know. I heard the TV on and People are coming over, using the Wi-Fi. Everybody's connecting on their phones. I thought it's going to be a problem. So I was not ultra low latency, but I have a decent internet connection. Nothing great. I think it's a 200 megabytes per second download speed, something like that. Not great. It's the best that is offered in my area, so whatever. Okay, Nike. Okay, good. Right on. Thanks for the feedback. So let's see. Nike. Yeah, Nike looks like potentially. I don't know. I think it's coming to the downside. We still have this gap that's unfilled. It's sort of double topped here. It's in a trading range. It's halfway through. It might chop around, but I think it's coming down. That said, it did chop some people up on this trend line here. So sometimes it comes back and finds stops and then keeps going. But I do think it's headed eventually back down. So, okay, Adobe, classic double top here, failed breakout, came back in. I was actually looking to buy Adobe to go to the moon. I missed it. And it has failed spectacularly here. Even coming below this prior low, coming back in, and then now failing. So I don't know what's going on with Adobe. This is one of the ones that did not work out. So it's actually back into this area. It bounced here originally. You see that? The 530. So you see that? I had an alert at 533.78. I never got it. I like to buy first bounces. The alert was just a little too low. So I missed buying this for a little bounce, right? In intraday, I would have looked for some sort of capitulation, and then I would have sold probably right into 550s or something. That's it. I wouldn't have sold way up here. I would have sold before this low. And I would have done some sort of 5-minute intraday chart with the stop loss below the lows. Tried to get in on capitulation as it hit that level, right? Because of this prior high, and then I would have sold below here. So if I could have had a really tight stop, if I could have gone in at 540 with the stop at 536, I would have sold 550, right? So then now you're talking about 2.5 hours or something like that, right? So the 550, nice round number. I don't know what it looked like intraday on that time frame, but that's what I would have done on this type of play, likely, right? Only because of this higher high and then a failure all the way through. So I would have looked only to scalp it. Now, if the movement was more like this, like this, like this, then like this, with that prior support being here, then I would have looked for a multi-day bounce up to say like that. But because this pattern was essentially the highs coming up here and then failing all the way through that, I'm looking for an intraday play, right? Rather than a multi-day play, because this is a healthier pattern, right? More of a complex retracement where it makes the highest high, all right? This low pullback, a lower high, and then a lower low on prior structure, then I would look for more of a bounce. But this is not a good pattern. It's false breakout. So this traps all kind of longs. And so now there's more supply on this kind of thing because of this prior look. And that's part of the reason for that. So anyway, hopefully that makes some sense. Oops. Come on. All right. I have a feeling I'm missing Thinkorswim's shortcuts. I think it's what, Control Z? Yeah, it is Control Z. And then there's some other ones that I think I'm missing too. Yes, absolutely, right? Think about it. If you're on the right edge of this chart, right, and you're seeing this thing here, right, That's right, because trapped longs. And then, all right, price is moving, and then it bounces back up. This is, again, we're on the right. We don't know what happens here, but we see this big V, all-time high pullback, and now it's what? It's a pullback, and it's starting to go, right? So what are you going to do as a trader? You're going to get in long here, right? You're going to be like, here we go, right? All these shorts are trapped. We're above all-time highs. You're going to get long. You're probably going to get long on some volume. Yeah, a little bit of volume there. And then it fails. Look, it starts to range out, sucks in more longs. Again, it is at this weekly trend line, right? So that's resistive. That's the reason I didn't take that trade, is because there was I talk about this all the time. It had a weekly constraining trend line, right? If this was over here and then it was breaking out, I would have taken it. That's why I didn't take it. I even mentioned that in the last video. I just could not remember. Anyway, so yeah, trapped longs, and that's what makes this move. And then we come back up here, and you can see the longs are like, get me out of here. This is not behaving the way I want. People like to hold. And then earnings come, and it's just crash, 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 crash. So they didn't, yeah, I don't know. Maybe they didn't like guidance. Let's see. I don't know. I don't know what the driver is, but this is a deadly chart for longs right now. Even all the way down here, right? It's just, I would not touch this with the 10-foot pole. Even if it does rally, because of this pattern, I would not touch it. But yeah, anyway, it might be on support. You know, big volume node. Might bounce, but I won't touch it. Chevron breaking out like a lot of other things. Oil related, I should say. Energy. So yeah, it just looks good. Balance would be, you know, this area here. So it's, you know, there's a few different ways to do this, right? You could look at this as left shoulder head, right shoulder pullback, go, and then, you know, target way up here somewhere, like 140. Or you could look at it from like more of a local perspective, which would be something like this, right? Pullback. Oops, what did I just do? Oh, wrong direction. Like that, right? We have 100% of the extended move is all-time highs, like 127. So different ways to kind of look at this, and we could see energy, oil is ripping right now, you know, coming back to highs and stuff like that. So yeah, a lot of the rest of the complex, the underlying companies are starting to look really good too. So if you're an oil trader, right, you keep that in mind. A lot of these energy companies. PepsiCo is on its way. We called this back here. Nice place to buy. Anyway, PepsiCo is on its way to all-time highs. Check it out. 100% extension up here at what? You're like, no way. Yes way. Abbott, same thing. Really nice pattern. So buyable pullback. Netflix, wah wah wah, hit its 100% target and is now pooping the bed. So this is not a good chart. Although recently I did upgrade my Netflix subscription. But anyway, not a great chart. Doesn't look so good. Thermo Fisher, look at that, hitting all these 100% moves, and even off this level, hitting everything, then pulling back, creating a new level. Boom, went up, hit that 670. So almost, which is why I like to take profits. Let's say you're buying some sort of pattern or breakout. You got to take profits into the target, which is why I never hit the perfect high, because I just take off the table. But yeah, this super sweet move here, right? Multi-month consolidation and breakout, right? You can see it here. Almost a year. Looks good. So anyway, we've done it. So anyway, let's go back. I'm not gonna chart all of these with you guys. I don't have enough time. It takes me too long to talk. I won't get my charting done, but I'm loaning some of you guys I hope some of you guys learn from this and enjoy, and then hopefully you guys come into the Discord, right? See that we're I actually know how to chart. A lot of these things are predictive and work. And if you've seen some of my prior videos, my weekly stock charting videos, you know that this is all real. It all works. I've been predicting directions of markets using classical charting patterns, and giving good setups for based on classical charting patterns for a long time. I did this into last year. Tons of predictions. You look at a lot of those old feeds, you'll see that many of those measured move objectives have all been met and exceeded, right? So this is not some BS, that I'm just like looking at everything in hindsight after the fact. All this stuff is, kind of in here. So my hope is that some of you guys, honestly, this is the kicker. My ultimate hope is you guys come into the Discord, start sharing, and some of you keep growing. You connect with a bunch of other contributors, and we pull you into our group, and we all get better as traders, and we keep trading for the next decade together, right? That's my hope. That's what I get out of this, in addition to sharpening my skills a little bit for explaining things. So that's it. That's my hope. So someone asked me the other week. They're like, "What's the rub?" Or right? That's what it is, right? So I'm just being honest with you guys. So I hope you guys come in, share stuff, get involved, stay involved. If you're curious and passionate about the markets, then you'll stay involved. If this is a short-term thing, then you'll probably come in, burn out really quick, and then move on, and that's fine. No one's gonna be begging you to do more, right? It has to come from within. That's why I don't really babysit the contributors. They either are passionate about the markets or not. So anyway, let's go through it. Apple. What do we say? Apple, neutral, bottom of the range, potentially a little bit more low. Microsoft, breaking low, potential bounce on support. Google, bottom of the range, potential bounce area, but maybe a little lower. Amazon, potential breakdown, right? Goes with the thesis already. Tesla, potential breakdown, had some good news, might come up a little bit. What's its weighting? It moves the NASDAQ quite a bit these days, doesn't it? Facebook, choppy range, right? Okay, if equity indexes are near the lows, what do you think may happen, right? Berkshire Hathaway breaking out near its measured move objective. NVDA, potentially breaking down a little bit more, right? That'll lend to some weakness short term. JP Morgan, like all the banks, pretty strong, right? So we have some names that could break down a little further and then are likely at bottom of ranges. Now we go look at something like SPY. Okay, so look at SPY. SPY, we are pulling back. We're in this channel. Some movement to the downside and then potentially bouncing, at least testing halfway up. Wouldn't shock me. But a little bit more to the downside wouldn't shock me at all. All right, let's go look at the QQQs. Bottom of the range. We already bounced intraday. Look. Right? Bottom of the range. Already kind of bounced. We've had what? 1, 2, 3 days of heavy selling. Right? On volume. Yeah, sure. It might break down a little bit more. We have some weak structure down here. Right? We have these constituent things here that we have looked at some of the charts. So can you start to see how you might weight the movement of these things in your mind, right? You may have a completely different opinion of me about the movement of these big market cap things. Okay, let's go look at the NASDAQ, right? NDX 100. So there you go, right? So here you go. Here are some of the things. So, okay, ASML wasn't included in the S&P. What's it? Near the bottom of the range. I got a notification when it broke this trend line. Potential failed breakout. Why? Higher time frame, range bound. Lower time frame, just breaking a trend line. So it stops out a bunch of people who like to short-term little local daily trend lines. People put trend lines all over the place. They put them up here. They put them from here to here. As soon as it breaks, they stop out. Or they buy the breakout, right? People love to play around these areas, which is why they pull back and go into the trend lines so often when they're these little very untidy kind of price movement trend lines, right? Is this a true trend? So let me ask you guys something. Is the true trend of this stock from here to here, is that a trend? Like, not a trend line. Is it a trend? Is the trend this, and moving down? Hello, Hashish Dalbeda. Juan, I hope so. I hope so. Bills, I know, my friend. Yeah, a lot of us that are in the contributors are full-time traders, but not all. But yeah, we have a lot of full-time traders. The majority are full-time traders. So that skews things a bit. I think we have about 150 years of experience amongst 8 or 9 people. So lots of experience in that room. Anyway. That's right, Simzum. The higher time frame trend, which is what? This. It's consolidation. This local thing is not the trend. But what do people do? They look at trend lines like this. I do it all the time. This isn't my make or break buy. I just want to see how it reacts around from 2 points being drawn. And when it hits the third time, what happens? But the bigger trend, right, is that we're just in what? We're in a symmetrical triangle near the bottom of a range. It's likely to do something like this. This is what's most likely, right? And then you have a rule of 3 here. So if it comes back up, it'll probably go a little higher, take out stops, then come back in, and then keep going sideways. And once it builds up enough out of position traders, once it finally comes up and breaks one of these, it's going to explode because shorts have to cover and people want to buy the stock. Because what? You know, all the slim can investors, right? All the Minervini type investors look at that and go, wow, that's a nice pattern, right? It's a horizontal compression. We're breaking out of a range. That's a sweet setup, right? And these are the people that get it, right? They understand these patterns that work more often than not, rather than these stupid little short-term trend lines, right? They're using moving averages and stuff like that to try and figure out, okay, you know, we're in a strong market and it's breaking up, right? And then, of course, look at the way this thing has the moving averages have fanned out. You have this 20. Right? You have this 10, this 20, this 100, this 50, the 100, and the 200. All really fanned apart. This market's digesting here. But if it starts to break up after these things compress a little bit, it's on and cracking. It's a good chart pattern. But here, putting a trend line on this, saying this little movement is part of the trend, no. This is the wave, and it's a compression part of the trend. Now, if it breaks below these lows and breaks this low here, well then overhead resistance to get out, right? Sweet little base up here, broke out. Here's 100%, here's 200%, here's weekly trend line resistance. Now look, whoosh, big sell, gap. There we go. OBS reconnected me, so maybe it'll start streaming to you guys right now. I don't know, but you know, look at all of this and start to go through the list. See if you can remember first. Okay, yeah, I've gone through and I've remembered what all these things were, and then, yeah, I know. Try to juggle in your mind all the things that are lending towards the indexes. And again, it's probably, if you're doing it for the first few times, your brain is going to be like, what are you doing to me? Yeah, Stream Boom, sorry. Um, if you're doing this for the first time, right, you're going to be overwhelmed, and just recognize that this is going to be really hard for you to do, and it's going to hurt your brain, and that's okay. I promise you, after a while, you're going to be like, I want more information, right? And then what you're going to do is you're going to do, I don't know, something like this, right? You're going to look at you're going to add economic data, and then you're going to go in and you're going to look at even more, right? You're going to go in, you're going to look at the Analyze tab, and then, okay, this is linked. All right, what is this? GDP Recession Indicator Index, right? What is this based on? Quarterly, right? It's based on percentage points, right? You're going to add this. Realize that things mean revert, right? We're here at lows. When is the next? All right, so let's go to the NFCI. What is it? The Chicago Fed Financial Conditions Index. That's what it is, NFCI. Right? So what ends up happening? Look at the dates, right? What happens when this thing stays at low? It mean reverts eventually, right? So how do you read that? Okay. Go to look at unemployment levels, right? It's dropping, right? COVID, oh, all the way back down. What does it do? What happens before? So these gray shaded areas are recessions, right? So what happens before we make lows, 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 and then eventually it mean reverts? Where are we at now, right? So this isn't useful to you short term, right? And just recognize it's not that useful. Here, let me see. Let me make sure the stream is actually still. Oops. The stream is still working here. Okay, so, all right. All employees, total non-farm. Okay, well, this just keeps going up and up and up. All right, here's COVID. Still hasn't made a higher high. Okay. ICE, master yields, credit spreads. All right. If you don't know what this is, go look it up on the Fred. I'm not going to explain every single little thing here. So what's happening? This is the state of spreads, interbank spreads, and how they perceive risk in the market. Ooh, still low. Very low. Look at that. So they're not pricing in a whole lot of risk, right? Look, when we had some meltdowns, what happens, right? They start to price in a little bit of risk. Look at this. COVID. Ooh, lots of risk, right? So they broke this trend line. Boom. Okay. So these things do tend to mean revert. Like, what are you sharing with me? What is this craziness? These things do tend to mean revert after some amount of time or hitting certain levels. We're at those levels. Yeah, Simsum. Non-private, new privately owned housing units, permits, right? In permit issuing places, not everywhere is a permit issuing place, right? So what ends up happening in the crash boom cycle, right? Housing goes bonkers. What's housing doing right now? It's gone a little bonkers. Is it totally crazy? No. Is it in this range where it has potentially led to recessions? Sure, right? I don't check these every week. So what I do is I look at, all right, so this format is monthly. Go to the Fred, look up when this is released, set a timer, not a timer, set a reminder on your calendar so that you look at, and the timer should be something, or the reminder should be every month on the day this comes out, you come and you look at it on the weekend, right? So you set it for a weekend every single month after that occurs. And then you know that now that becomes part of your tracking for when a new report comes out, and it's monthly. So go to Fred, see when it's released. So do some homework, right? See how this takes work. But all this stuff will help you a lot. Okay, trade balances. Balance of payments basis. This is monthly, right? In millions of dollars. Okay. Trade balance. Okay. 10-2 yield curve, right? What's it doing? Is the yield curve usually when it goes below zero? Is it often a leading indicator? Sure, right? Look, below zero, the yield curve inverts, recession. Yield curve inverts, recession. Yield curve inverts, recession. Yield curve inverts, depression. Right? Yield curve inverts. Look at that. Look at that day. Look. It was happening before the coronavirus, right? Yield curve inversion right down here. Bing. A lot of you guys are going to be like, what is all this craziness? Manufacturing sector output for all employed persons. So there you go. Manufacturing output, right? Do you understand any of that? Okay, if you don't, just go Google. Go Google it, right? Why is the manufacturing sector output for all employed persons, which is, OUTMS:Fred, put that into Google, Google it. It'll take you to the Fred website, right? As a symbol, read a little bit about it, and see why it's important. Okay, so, all right, bouncing it to the top of the range, right? So as you start to put a value to this in your mind, you now start to aggregate all of this data and go, maybe I should be a little wary because, when I look at, let's see, I cannot wait to, this stuff won't work in charts, by the way. You have to do it in the Analyze tab, by the way, right? And economic data. It's the only way it'll format this correctly because a lot of these are all quarterly. I mean, you could change your charts to quarterly to match this. Then you'll get it in a chart that you can manipulate a little bit more. But this automatically does it for you. So just FYI. So anyway, the more you look at all this stuff and look up all the data, and then I've put together spreadsheets for all these indicators based and included all the descriptions for these and how they interact with one another, right? And it's not perfect. I don't use this to trade every day, but I do use it to give me a longer term bias so that when the market comes up into certain financial conditions, I can start to say, okay, I do kind of need to be careful here, right? With 100% of my portfolio long or something like that, right? Like, be a little cautious. The technicals are indicating X, Y, and Z, right? We have this other overhead that's occurring. Inflation's going a little bonkers, right? What are some of the things that the Fed might do? How will it affect each of these other economic data indicators, right? What's the potential for all of that? And I put it all into a spreadsheet with explanations for everything. So that if I'm checking something every quarter and I'm like, I can't even remember what this thing does. Well, I go back to my spreadsheet and just read about it. Like, oh yeah, that's right. That's what it does, right? Because a lot of these I'm only checking once a quarter, because that's when they release the data. Why would you check it every week if it's the same data week to week? Doesn't make any sense. Or maybe you do, and it gives you like a working knowledge of what's happening, but I don't, because it's too much. I don't want to live in the markets 24/7. Like I have for the last, feels like. Is this thing even working? Is it even streaming? Let's see. Yeah, I think it is still going. Okay, yeah. So last 4 hours. But anyway, that's the live stream for today. This is what goes into some of my weekly reviews, and I hope you guys found it useful. Have a great weekend, and hope to see you guys in Discord. Again, be persistent. Trading is not about the sprint; it's about the marathon, and succeeding over time, right? Don't try to trade the markets like they are a slot machine at a casino, because the casino has the edge, and your risk of ruin with high risk, risking a high percentage of your account, your risk of ruin goes way, way, way up. So, all right, guys, have a good one, and thanks for stopping in.